I, Ananya Gupta, warmly welcome you all to Technical Session 1 of South Asian Economics Trade and Development Conference 2026. This flagship international academic policy forum is being organized under the South Asian Academic Summit 2026 by the Center for Development of Intellectual Property and Research, Naovina, Development of Intellectual Property and Research Foundation, CDIPR. We are incredibly proud to host this session in collaboration with our esteemed international partners and the community of Academic Research and Development Foundation. So now to start with, we are now starting with the presentations. So I am also deeply honored to introduce our session chair for today, that is the director of CDIPR. Sir, I welcome you here. Now we'll start with the presentation. So first of all, we'll begin with Divyam Rastogi.
Okay, before beginning with the presentation, all the participants keep noted your time is overall 6 minutes. 5 minutes would be allotted solely for presentation and 1 minute is allotted for Q&A if there is any questions to be asked. That is for like overall 6 minutes would be taking up. Yes, the first participant Divyam, you can continue. You can start. Participant, you are not audible.
Okay. So
Yes.
good afternoon, everyone. Myself Divyan Stogi, and today I will be presenting my paper on debt monetary conflict in India or in South Asia specifically. So so my paper looks at how government debt can affect central banks, private investment, and economic growth in the country. It mainly focuses on three countries: Pakistan, India, and Sri Lanka. So now, what is the main problem here? Central bank usually increase interest rate to control the inflation, as we all know. But when the government have more debt, so central bank force to do not increase the interest rates because at as it increase the borrowing cost of the government. This creates a conflict between controlling inflation and managing government debt. Or and this situation is called physical dominance. So what is exactly physical dominance? It happens when government borrowing becomes so important that it limits the central bank what can do. Even if the central bank wants to fight inflation, it cannot completely free because higher interest rate can make government debt more expensive. As a result, monetary policy becomes less effective. So how does this affect banks? When government borrows heavily, they issue more the government bonds. Of, and banks often prefer to buy these bonds because they are safer and they get reliable returns. Because of this, banks may lead may lend less money to private sector and the corporation, which may lead to more expensive loans for the expansion and investment in the country. So now let's take two examples from countries. First one is Sri Lanka 2022 case. Sri Lanka is one of the strongest example in my paper. It debt increases and reached up to 119% of the GDP. Debt payment took up to 70% of the government revenues. In 2022, inflation about 70% and the currency lost its value. This shows what can happen when debt becomes too large and difficult to manage. And the second example is Pakistan. Pakistan faced a similar challenge. In 2023, inflation reached about 38% and interest rate about 22%. Even though Pakistan central bank had legal independence, large government borrowings still limited to practical choices. This shows what Legal independence alone is not enough. Some economists argues that government borrowing is useful because it helps to finance roads, railways, energy projects, and other infrastructure. The paper agrees that infrastructure is important, but many projects take years to finish. The the borrowing costs happen the borrowing costs happen immediately when the benefit came much after longer. That is the main concern by the paper. As you can see in my screen, these these roads may be built after 10 years, but the interest rate place the interest rate took place when the debt raised. The paper suggests stronger coordination between physical policy and monetary policy. It proposes a system where government borrowing limits automatically adjusted when inflation or debt level becomes too large. The government is pays excessive borrowings before it creates a crisis. The main issue is not the high debt. The bigger issue is that high debt reduces policy flexibility, weakens investment confidence, and limits the effectiveness of the central banks. This can slow long term economic growth, as we can see in the Pakistan's case. So, what is the conclusion of my presentation and my paper? To conclude, the paper argues that excessive government debt can create a physical dominance. This reduces monetary independence, affects private investment, and increases economic risk. Sri Lanka and Pakistan shows the possible consequences, while India highlights the importance of maintaining physical discipline. Thank you.
Okay, participant, what is your one possible solution specifically for reducing this debt conflict?
So my conclusion for reducing debt conflict is that the government should borrow from inside the country's banks, not the outsides, and also they they should target to increase their revenue, not their debt. So they must try to create their own companies and corporations so that they can increase their revenue and not prefer debt financing.
Okay, in one of the like not very recent, just 4 to 5 months ago, one of the Niti Ayoga has published a report regarding the increasing import, like decreasing import and reducing the dependency of India to the other foreign countries regarding the crude oil and also to enhance with the biofuel. So for the biofuel today, we can see the implementation of E80 and even E100 is being talked nowadays regarding this fiscal policy. So what is your take? Like whether by reducing the import of the fuel and implementing the policies such as biofuel, how long or how farther the India can achieve this kind of debt free structure in our fiscal policy.
So debt-free structured policy for a developing country is not practically possible because we need that to create infra and jobs for the people. But because government saying we reduce petrol and we prefer E20 and E100 fuel, but the car companies are not preferring this because E20 fuel engine are not very cheap and not very preferable by the companies right now because they don't have the because they don't have the technology, and people are more concerned and people don't have E20 fuel cars so to support E20 fuel.
Okay, I'd be providing you one suggestions regarding your paper. Your paper is completely fine, but it lacks specification related to the contemporariness of your topic. You can relate this to the fiscal policy which the government of India and the other South Asian nations is adopting for last 3 to 4 years, like how they are reducing debts. You can analyze this and also try to include this kind of like case studies. Like for India, we can see the implementation of biofuel is fuel is a case study where government is telling that it will reduce burden on the dependency of the foreign countries. But again, like as you well mentioned, that the cost of a vehicle for the biofuel will includes, and ultimately the people for short term they have to suffer, but long term there are also benefits regarding it, environmental benefits, also the dependency reduce benefit. So these things has to be assessed by the researchers like you. So try to incorporate all this in your revised version of your paper which you have submitted, and we'll be looking into it.
Okay, sir.
Thank you for your presentation.
Thank you, sir, for inviting me.
Yes, we can move ahead with the next speaker.
Yes. Next we have Dr. Bhavesh and Dr. Komal.
Very good
Okay.
afternoon, sir.
Yes.
Mhm. I'm just sharing my slide. Myself, Dr. Komal Sharma, along with my co-author, Dr. Bhavesh Bharar, presenting our research paper entitled Digital Trade, Innovation and Intellectual Property, a comparative analysis of South Asian economies. At the outset, we would like to begin by just situating our study with the broader global context. In the recent year, the global economy has witnessed a shift from traditional modes of trade to the digital driven economics interaction. Digital trade today encompasses the e-commerce, cross-border data flows, digital services, and platform-based economies, making this component a more economic development. However, while technology act as the an enabler for the digital trade, at the same time, sustainability of digital trade depends upon the two foundational pillars, that is innovation ecosystem and intellectual property protection mechanism. Ecosystem that adequate the digital
Dr. Bhavna and Aprajita can join the main room.
without the
I'll be
effective
sharing.
IPR frameworks,
All right.
innovation is itself discouraged. To bring this a core problem addressed in our study in the context of South Asia, uh, although digital adoption is increasing rapidly, the supporting framework for innovation and intellectual property remains inconsistent and fragmented in the entire South Asian countries. These imbalance that creates a structural challenges for the long-term digital trade growth. Moving to the literature reviews, it is observed that most of the existing studies are majorly focused on developed economics where a strong history.
Participant, you can skip the literature review.
Okay, okay, sir. Now moving next with the concept, which is primary objectives of our study, which is basically based on threefold component. The first is to analyze the relationship between digital trade, innovation, and intellectual property. Secondly, to conduct a comparative evaluation of India, Bangladesh, and Sri Lanka. And thirdly, to identify the policy gaps and propose recommendation to strengthen the digital trade ecosystem in South Asia. Coming to the methodology, the study adopts a non-doctrinal comparative approach relying on the secondary data from creditable sources, with inclusion of multiple indicators such as patent filing rates, innovation indices, digital readiness, IPR enforcements, and have been analyzed to ensure a holistic understanding of the concept. Before moving to the further, I just want to brief out why the selection of these three countries had been made. So these nations were selected because they present a different stages of digital and economic maturity with the same regional framework. India serves relatively advanced digital economy, while Bangladesh and Sri Lanka representing the emerging economics in the South Asian countries. This variation that allows us to make a balanced comparative understanding of the development trajectories. Now, I would like to discuss what major outcomes of the study uh, the administration profile, the comparative analysis, and the entire system that completely shows that India is emerged as the major performer among the selected countries, and its digital infrastructure is supported by initiatives such as Digital India, accelerated by the digital inclusion and innovation. Additionally, a relatively stronger IP framework, along with the increasing patent filing startup activities, that has contributed a growing dominance in the digital trade. While moving to the another hand, that is Bangladesh, that demonstrate a steady progress, particularly in digital financial services of e-commerce. But however, its innovation system, or we can say its IP framework system, is still at the developing stage, with the limited R&D investment, lack of awareness, lack of intellectual property rights enforcement challenges that restricts its ability to fully capitalize on the digital opportunities. Similarly, Sri Lanka, that again shows a moderate advancement in the digital literacy and infrastructure. However, more economic challenges, policy inconsistencies, institutional limitations that act as a barriers to the innovation-driven digital trade growth. An important contribution of this study that is identified which is that identification of the strong yet complex interrelationship between these three things, which is IP, innovation, and digital trade. While stronger IPR frameworks generally promote innovation and trade, and the effectiveness of these relationships is supported by factors such as governance quality, regulatory efficiency, access to financial resources, and human capital. Another critical highlights of the study is digital adoption is not only sufficient for the countries. Countries must have to create an enabling environment where innovation is encouraged, protected, and effectively commercialized. Without such an ecosystem, digital trade remains superficial and unsustainable. Based on these findings, the study proposed several recommendations. Firstly, there is a need to strengthen IP enforcement mechanism to build trust among the investors and innovators. Secondly, government must increase the investment in research and development with the digital infrastructure. Thirdly, the regional cooperation among South Asian countries should be
Participant, you had
enhanced.
exceeded the time. You had exceeded the time. You kindly wrap up in few seconds.
Okay, I just want to conclude the thing is to when we are concluding the study, I just conclude my entire study with the thing that digital trade, innovation, and IP property are deeply interconnected and mutually reinforced. So if we want to highlight, and if we want to go with the digital adoption, we should also encourage that innovation is protected and effectively commercialization with if effectively commercialized with the help of innovation ecosystem. Thank you.
Okay, a participant, one of the major challenges nowadays we see in implementing the policies of any services or any product, it's like implementation of the GATS itself. Like there are a number of signatories of the WTO which is currently working on the implementation of GATS, General Agreement on Trade on Services. What is your understanding, like how far in the country like India or in the global south the general agreement on trade and on services is effective, and it's boosting of the economy and not biasing towards only the developed countries like UK and US? What is your understanding on it?
uh, as I know, India was the signatory member of GATT in from 1994. throughout till date. So I believe that GATT is the authority that rules and broader the WTO framework to contribute or shape the Indian trade policy. So while adopting these policies, we can assure that we are not only depending on that, but we are defending the interest of, for example, I can say agricultural subsidies, anti-dumping duties, export controls, or navigating challenges through the broader members of nation, or such kind of domestic measures that are more advanced level, or more effectively regulated after adopting the GATT policies and GATT measures. So we cannot say we can say that GATT is not only uh, protecting, but it is supporting as well. Or I
Okay.
can say India
All
is
right.
currently
All right,
standing in
participants.
commitment to the WTO profile.
Okay. So specifically, your paper like has to be in the two aspects, Dr. Bhavesh and Dr. Komal. Like there are two
Yes.
aspects it has to be discussed according to my understanding.
Yes.
Your paper like is completely fine, but it like lacks the contemporariness. What contemporariness is has to be added. See, when we looked into the WTO framework, one of the major challenges currently WTO is facing is the mechanism of dispute settlement. Like for
Yes.
years they had not been appointed proper adjudicator, and the authority in the WTO dispute settlement, it's lacking. So what as a researchers we can contribute, we can come up with some of the solutions that how this kind of dispute settlement mechanism can be reinforced again. This is the first point I want you like both of you to include in the revised version of your paper. And the second point is like the countries like India, like we are the developing countries, and also there are underdeveloped countries who are the part of WTO. But often we see like there are number of directory, and the also that there are number of cases in the international jurisprudence where the countries are blaming that these WTO and then the international platforms are just biasing towards the developed countries. They are biased towards developed countries, and they are not favoring towards developing countries. So this is also the aspect where we can look into how far the biasness, if it is existing, in which way like the countries are favoring towards this. So these are the two things I want like you guys to work upon it, and
Okay.
like we can attach to the contemporaneous. Yes.
Okay. Thank you, sir.
Thank you, sir. We will add it.
All right. Thank you for your presentation.
Thank you.
Yes, host, we can move ahead with the next.
Okay. So the next participant we have is Divyanshi Gangwani.
Yes. Yes, participant, kindly share your presentation. Yes, you can start.
Oh, okay. So I'll start on the counter of 3, 2, and 1. Every algorithm learns from a human story. The question is whether the law remembers the storyteller or not. Greetings, everyone. I am Divyanshi Gangwani, and I shall be presenting our paper titled Creativity versus the Code, Rethinking Authorship and the Struggle to Protect Human Rights Expression under the Copyright Law. Now, as I speak of which, I would like to highlight certain statistics before you. These statistics are that India has recorded more than 86,000 plus EI related patent filings between the year 2010 to 2025, demonstrating unprecedented technological advancement. But at the very same time, what we see is at nearly 65% of the Indian organizations reportedly experiencing deepfake related attacks in 2026. This statistics in itself reveals a paradox. What we see as the same technology, that is the artificial intelligence, which we nowadays use and is being used to generate multiple technologies such as multiple technologies and is being used in our everyday life. It is also being used at the very same time to extract value from the human labor, that is from the author's labor, without their actual consent. So our paper is going to answer the central question that when artificial intelligence creates something, who owns the creation and how do we protect human dignity in this process? Furthermore, as I speak of which, I would like to highlight that the focus of our study shall revolve around five key topics. Firstly, ranging from authorship and ownership, wherein Section 2D of the Copyright Act deals with authorship. Text and data mining gaps explains the legal gaps within Section 52 of the Copyright Act, which deals with fair dealing approach. Section 57 of the Act, thirdly, which deals with moral rights and personality rights. Alongside this, we have entailed a comparison between India, US, and EU, which is European Union, and finally a harmonized framework that deals with basically a balancing approach, which deals with balancing innovation and human dignity. Methodologically speaking, we have adopted a doctrinal and qualitative approach. At the very same time, the primary resources include Copyright Act, DPDPA Act 2023, and judicial precedents. Alongside this, the secondary sources include policy reports, international framework.
Participant, you can directly move to the research questions and the further procedure.
Sure, sir. As I speak of which, AI disrupts classical IPR assumptions. Firstly, authorship uncertainty, which deals with when a user merely enters the prompt and AI generates the expressive content, determining the true author becomes difficult. Secondly, input versus output infringement, which deals with infringement may occur not only when the content is generated, but at the primary stage when the same content is being used at the training stage. Thirdly, style substitution, which deals with AI can imitate artist style without the artist expression or thought behind the same. And finally, a dignitary overlap that deals with AI systems increasingly utilizes voices, expressions, behavior patterns, etc., creating an overlap between copyright, privacy, and personality rights. Furthermore, I would just like to highlight that the previous approach that was being followed as per the EBC, that is Eastern Book Company versus DB Modak case 2008, wherein the Supreme Court has rightfully said that previously we used to follow the sweat of the brow approach, but now what we follow is the modicum of creativity approach. I'll quickly explain the same, wherein previously what we used to see that if we are doing a trivial prompting, for instance, that I say how to write a research paper, that shall not be given a copyright protection, but a substantial form of prompt and heavy level of editing, which gives it a modicum of high level of effort and creativity, which shall give them copyright protection as per the act. Now, furthermore, we deal with Section 57 that deals with moral rights. What are moral rights? Firstly, I would like to say copyright is not merely an economic transaction or economic right. It protects human right to dignity. This brings perhaps us to the most human dimension of copyright law, which is the moral rights. As I speak of which, Section 57 grants moral rights, which are primarily two sort of rights: right of paternity and right of integrity. Right of paternity allows the author to claim over the over the authorship, and integrity provides the author power to restrain the derogatory or mishandling of the copyrighted work. We also have landmark case laws with respect to the same, such as Amarnath Sehgal versus Union of India 2005, where Delhi High Court have also highlighted the same. As I move forward, I would like to highlight the 5 case examples where we are now currently seeing AI moral rights violation that has to be included, which is one of our suggestions ahead in our present day law, which is style limitation, that there are thousands of artists now because of AI, they're in style, the living artists in style, the approaches, which is the X factor or the market value, is being produced instantly. Now we have derogatory recomposition that deals with repurposing highly serious or cultural designs into harmful or prejudicial manner in the form of viral internet memes. False attribution and memorial exploitation deals with circulation of AI generated imagery falsely under the name of well-known living artists or deceased artists, thereby confusing the public and damaging their professional standing. And lastly, reputational flooding that deals with deepfake, which has now become a common threat. Furthermore, now what we see, what our focus is fair dealing, which has been dealt as per the Copyright Act under Section 52. Now we stand at 2 crossroads, wherein if we give a restricted approach, that shall in a way favor the tech conglomerates and rather act as a challenge to local developers, Or alongside this, if we give a permissive approach, where it's giving 100% of free hand to these tech conglomerates, that is also going to in a way hamper the local developers. So what we need in India is a balanced approach. At the very same time, we have suggested a solution in the form of a non-expressive analysis, which is an exception to the text and data mining approach, which is being followed in the EU, which is the European Union, for social research, while also giving opt-out option as well as remedies in case of infringement. Now, as I speak of the Digital Personal Data Protection Act 2023, we have this act has four major parameters which make it fit for our current day needs, which is notice and consent. Firstly, that the author should be given by the tech giants, the platforms, the notice of using their content even for the purpose of training. Purpose and limitation, that the purpose of using for which a work has been generated should only be used for the specific kind of work. Data fiduciary accountability, this deals with enforcing strict compliance on authors or developers. And finally, a cross-disciplinary language approach. Furthermore, now as I speak of deepfake that I had mentioned previously, deepfake has become an emerging challenge, and as we see India's growing AI infrastructure, we need to address the same. Deepfake currently illustrates the convergence and the conflict between copyright, privacy, and personality rights. According to the recent reports, 65% of the Indian
Participant
organizations.
move to the recommendations and solutions. You had
Sure, sir.
exceeded the
I'll
time.
just stop. Sure, sir. Of India, 65% of Indian organizations have reportedly experienced deepfake attacks, and we have now increased our AI infrastructure in the form of AI coach. This is a comparative study between India, US, and EU, where US follows a human author-centric approach, whereas EU is a bit more open with respect to the same. India needs to carve out its own path while balancing the needs of the local developers and the rising AI needs. And we have also analyzed the sustainable developmental goals, which have been analyzed below. And finally, as I move towards the reforms, what we need in the current times is the amendment of Section 2D of the copyright approach, which should include within itself substantial human authorization and not trivial machine operation shall be given authorship. Secondly, introduce a text and data mining exception under Section 52 that allows a non-expressive research but mandates a commercial opt-out registry and compensation mechanisms. Alongside this, expand Section 57 for AI harms and deal with AI-specific moral injuries that I had discussed previously, such as reputational flooding, etc. Operationalize the DPDP Act. Further mandate platform accountability for rapid action and collective licensing architecture that helps artists alongside this. Further, I would just like to conclude that the future not belongs to creativity or code alone, but to a legal platform that protects it. Thank you. Thank you.
Okay, participant. One of the question which comes to my mind. That's very simple question. How you will distinguish an expression with human rights expression?
Just a second. Yes, sir. Uh, Sir, as I have to answer your question, I'll simply state that, sir, could you just repeat your question? I just got to
See, in copyright or like in the IP framework, we have expression that is completely fine. Any kind of expression which has the manifestation of it. It can be in writing, it can be in other forms. Has can be taken up in the IP. But
Yes.
what is your difference from expression and human rights expression as per the topic you had chosen?
Human rights expression deals with the creative aspect, while an expression can merely be an expression of a machine generated expression, but a human rights expression shall have the thought and the process behind the same. As I have previously mentioned in my slides as well, that what we aim to protect is not creativity or the code, but the process and the thought and expression behind developing the same.
Okay, so for this, we also have to look into the legal aspect of the legal personality, uh, how a legal person or a natural person is different from it, and also like try to look into these doctrines of personality. There are various country which is following a different ideology regarding it. So you can see in Saudi nations we are having Sophia, where they had recognized a robot as a legal entity. That It's not
Yes,
about person, it's about entity. They are recognizing it as an entity. But in the other states, the other countries, it's not. So how this jurisprudential shift has been changed? You come up with a like a study or the case studies in your paper, and also the legal personality has to be dealt in India or in any of the common law countries. We only recognize a human being to hold the copyright, and the reason behind is to come up with the accountability. We cannot give accountability to a robot. They cannot
yes,
have emotion. We cannot punish them. We cannot sanction them. So how they can be accountable? They can't be accountable. So we need a human being who has a afraid who is afraid of sentencing, who is afraid of going to jail, who is afraid of punishment. So these are the psychological aspect of punishment, where we goes into the theories of punishment. So all this aspect is connected towards your topic. It has to be dealt in such manner. So try to incorporate these aspects.
sure, sir.
All right. Thank you for your presentation.
Thank you, sir.
We can move ahead with the next participant host.
Sure, sir. The next participant is Trishla Dubey. I would like to request her.
Yes, participant, you can start with your presentation.
Yes, good evening, Chair and the organizing team. I'm Trishla Dubey, and I'll be speaking on the topic WTO compliant export promotion in South Asia, lessons from EU PET Pakistan for India's duty drawback scheme and route 10. So, in this presentation, the core question that I'll be addressing is how South Asian countries, especially India, can promote exports without violating WTO rules. And the entire discussion is in the light of the standards developed by EU PET Pakistan case. So, in this slide, I have explained that why export promotion is required for the countries, even the South Asian economies. It is industrialization, employment generation, MSME integration, foreign exchange earnings that countries make that is extremely crucial for their economy. For all of these reasons only, countries enact various schemes and policies in order to promote exports in their country and out of their country. However, these export promotion schemes, which are there, sometimes they are in the nature of subsidy, and export subsidies are prohibited under SCM agreement because they distort trade. So one needs to carefully curate, design the export schemes which or promotion schemes that they have in order to remain WTO compliant and remain in the business or remain competitive with when it comes to the other countries and their exported goods. In this slide, I have touched upon the direct agreement that talks about these kind of subsidies or export promotion schemes. Basically, it's covered under subsidies and countervailing measures agreement. The relevant provisions are also mentioned in this slide. Article 1.1 defines subsidy precisely, but footnote 1 talks about remission carve out. So, if there is any exporter and they are producing the finished product for the purpose of export from our country, then they'll also require certain raw materials, certain inputs. And if those raw materials are imported from another nation, then government will charge them with the import duty. So under remission carve out, what is being done that the amount up to which you have utilized the imported goods as inputs for the production of the finished product, which is going to be exported outside, up to that amount, whatever duties you have paid, it will be either given back to you or in some other form it will be rebated. That only is remission carve out, and if government does that, it is a support. However, it is not prohibited also. So it is totally allowed for governments to do that. The procedure is covered under annexures second and third of the SCM agreement, which countries have to observe. They have to keep in mind if they are going for remission carve out. Now, the case which I am relying upon is EU PET Pakistan case, wherein EU imposed countervailing duties on Pakistani exports of polyethylene terephthalate. And later on, Pakistan challenged the countervailing duties before WTO dispute settlement body, stating that EU has treated the entire remission under manufacturing bond scheme as a subsidy, which it should not have, because only the excess remission can be treated as a subsidy if it is only up to the input only up to the input duties, then that is totally allowed. So the core questions that were discussed in this case was with respect to whether the emission under MBS, Manufacturing Bond Scheme, excessive relative to actual duties incurred on inputs, were Pakistan's verification procedures adequate as per Annexure 2, and thirdly, could EU treat the entire remission as a subsidy? So the key findings from both the panel and the appellate body was this, that subsidy could be called, I mean that very duty drawback which is there, or the rebate remission is there, it can be called a subsidy only when it is in excess of what should have been otherwise given. So if the input raw material has a particular kind of duty, charged a particular kind of duty, that can be rebated. But if it is beyond that and it is in excess, then it is a subsidy. This is a very major key takeaway, which I'll be using in the later slides as well. Secondly, verify actual input consumption. It is for the countries to do. They have to maintain proper records, and countries must do that in order to differentiate between the actual input consumption and the excess input consumption. And thirdly, always the investigating authorities, before they impose countervailing duty, they need to ensure that reasoned and adequate explanation is given for their determination, which is a high procedural standard that EU in this case failed to meet. So basically, Pakistan won this case because this particular case clarified the law. Now, in the Indian context, the duty drawback is covered under Section 74 and 75 of the Customs Act, and also under RoadTEP scheme, which is remission of duties and taxes for export products. It was initiated in 2021. So I'm focusing with regard to export promotion only on these two schemes that are there. And here I have compared the Indian framework of duty drawback as well as the RoadTEP with the Pakistan's MBS. So they are majorly same, but Indian RoadTEP is slightly more complex. Here in this particular slide, I have given the scenario with respect to all the South Asian nations. So it can be seen that from India to Nepal, almost all the South Asian countries which are there, they are maintaining drawback and remission in one or the other form. The degree changes slightly with each and every country, but the case, EU PET case, and the standards developed in this case are relevant for the first 5 South Asian countries, whereas in the next 3, Bhutan, in the case of next 3 countries, Bhutan, Maldives, and Afghanistan, even though now the kind of duty drawback they are maintaining is very limited or almost non-existent, but tomorrow, whenever they scale their exports, the EU PET standard is going to prove itself as pivotal, very, very crucial. So in the light of this discussion, the EU PET standard is relevant for all the South Asian countries. Here, I have given certain recommendations which can be used to make our framework, as well as for the other South Asian countries also, how they can make their export promotion schemes more in line with or more aligned with the EU PET standard. The first suggestion that I have given is with respect to strengthening of the verification mechanisms. So the domestic authorities only have to do, like in India, we have the Directorate General of trade remedies. So here, these authorities only have to ensure that the industries, the exporters are maintaining proper documents and everything, so that whatever raw material they are using as input for the production of an exported good, that can be distinguished from the excess goods which are there, or excess remission. It will help in doing that calculation. Secondly, proper digital integration can happen. We already have IceGate, GSTN, and RoadTEP portal, but proper integration, the more deep integration among these portals will create seamless verifiable data trials for duty remission claims. Also, MSMEs have usually been not good with the documentation part, so properly they can be trained about how they must go with respect to maintaining the data as to what kind of input they are using and up to what extent they had paid the taxes and what should be rebated. Fourth one is about documentation only, proper record keeping requirements, guidelines, model laws can be issued on the same. Next, regular review of drawback and RoadTEP rates must be made so that they do not constitute excess remission, because excess remission is a subsidy. And then also clarification is required on benefit attribution across supply chains, because then that gets very, very complex. So proper methodologies for attributing embedded tax benefits would be quite helpful. Interministerial coordination can also be can also be a game changer in this regard if coordination is there between Ministry of Commerce, CBIC, and GST Council to ensure coherent and defensible scheme design. Because if any case is initiated against India or any other South Asian nation, then if they have proper documentation, if they have proper coordination, proper data, and everything, then that will help us.
Participant,
Um,
you can move to the conclusion and findings.
yes, sir. Yes, sir. So, with other WTO committees, also coordination is required and best practice frameworks must be developed. So, my conclusion is this that this case, EU PET case, confirms permissibility. So, basically, remission schemes which are there or duty drawback schemes, if it is used for promotion of exports, then that is allowed. Provided that they are as per the SCM agreement requirements and they are as per EU PET case which is there. So they have to maintain the documentation, verification, everything has to be ensured. Then excess remission is a subsidy, which the case very much clarified. India's framework is broadly aligned. It's just that the complexity of route tech must be reduced and more evidence-based verification can withstand the scrutiny in the later years. And finally, the South Asian economies must transition from incentive-based export promotion to compliance-driven competitiveness, building legal resilience into scheme design. Thank you so much for the opportunity.
Okay. So, Ms. Participant, there are one question in my mind, specifically given the WTO's restriction on the subsidies. How a
Yes.
country like India effectively use the schemes such as road tag, which was mentioned, and the duty drawback schemes, like how we can come up with these schemes and along with ensuring full compliance with the international trade obligations.
Yes, sir. So this case is considered to be landmark for that purpose only. We already have schemes in place, the duty drawback one as well as the road tax one. It's just that proper detailed rules and regulations we do not have. Like for example, if verification has to be done, then what all materials one must rely upon? What are the factors that are very much essential in order to come to the conclusion that the assessment or the auditing was completely objective? So if we have detailed framework on the same as to how verification auditing is to be done, how the MSMEs and other exporters they are required to maintain the documents with respect to the raw material they are using and the kind of taxes that they have paid to the government, that would be helpful. And then, of course, it won't be a subsidy anymore. If whatever the exporters are paying, that only they are getting back, then it is not a subsidy at all. We just have to ensure that we remain very, very objective in terms of remission.
All right. Thank you for your presentation.
Thank you, sir. Thank you.
Yes, host, we can move ahead with the next.
So next we have Dr. Bhavna.
Yes, Dr. Bhavna. Dr. Bhavna, you are not audible. Kindly unmute. Dr. Bhavna, you are not audible. Kindly unmute. Okay, yes, Dr. Bhavna, kindly keep your presentation ready.
Am I audible now?
Yes, you are audible, but your presentation is not visible.
Due to
Yes, I'm trying.
certain weather
Actually,
conditions, we are facing certain.
we are facing certain technical glitches. I'm trying my best. Just give me a second.
Okay, no issues. Please be quick.
Yes, sir.
Dr. Bhavna, if it takes time, we can move ahead with the next and then call you.
Yes, yes, definitely. Because
All right, host, we
just
can move
wasting
to the
time.
next
I'm
participant.
trying my best. The next presenter, yeah.
Okay. Host, we can move ahead with the next participant.
Okay, sir. The next participant is Aprajita Saha.
Just give me a second. Am I audible? I'm just sharing my screen right now.
Yes, you are audible and visible. Kindly share your screen.
Yes. Is my screen visible? Could you confirm, please?
No, it's not visible.
Okay, it's not.
All the participants keep your
Is it visible
presentation
right now?
loaded. Yes, it's showing now. All the participants keep your presentation loaded before your slot. Yes, you can start with your presentation.
Thank you. What I wanted to talk about today is paradox. India has millions of small businesses what generally want to go green, and a financial system that generally wants to fund green businesses. Yet, two sides are not meeting. My research asks why and proposes a way to fix this bridge the gap. Moving ahead. The pressure on MSMEs to comply with ESG standards is real and growing. But here's what concerns me: the rule being applied to them is never designed for them. When a small manufacturer from a city like Jabalpur or Surat is asked to produce the same sustainable disclosure as a listed conglomerate company, it is not regulation, it is the exclusion dressed as compliance. We are not talking about a small segment of the economy. MSME is the economy itself. Near one third of the GDP, half of the exports and livelihood that occurs for more than over 32 crore people. And yet, more than 7 out of 10 of them cannot even access a formal bank loan. We are serious about a green transition in India, and we cannot afford to leave this sector behind. So, when I was looking for the fault lines, where exactly the system breaks down and what would it take to fix it properly? I built a study on the policy data from Security Exchange Board of India, the Reserve Bank of India, NITI Aayog, and SIDBI. And these were used gap analysis and the multi-critational data modeling to locate the pressure points. What I found striking here that three-quarters of MSME want to invest in sustainability, but fewer than 1 in 7 actually access the green finance. The distance here between wanting and getting. It is not explained by the lack of effort or the awareness alone. Something structural is blocking the path. To make that argument rigorous, I developed 4 original indicators. The one I want you to remember is the intentional access gap, 60.4 percent points separating sustainability intent from the financing reality. And the sustainability financing deficit is sitting at 81.4%, meaning the green finance system is currently serving less than one-fifth of the actual demand. And this is not a small gap. This is a systematic failure. Moving ahead with the discussion, and the reason is not that MSMEs are uncommitted. The reason is that they cannot produce the kind of verification, audit ready, and sustainability data that the lenders need to make a decision that is transparent, a decision that will make and recreate the future. Where there is no data, there is no trust. Where there is no trust, there is no green credit, and then there is no green investment after all, and the progress is put to a halt. And this is a cycle and it won't break on its own. Which is why I propose something different. Not another reporting mandate, but a verification infrastructure, a 3-layer digital system that takes the operational MSMEs already generated, utility bills, payroll records, waste logs, runs it through the automated validations and produces a standardized ESG report that a lender can actually use. The key highlight here is MSME do not need to do more. They need a system that makes what already exists into a legible financial world. Then we also have the policy table. Every recommendation in this study traces back to the specific and the quantifiable failure. I deliberately designed it the way because policy built, not evidence, is harder to dismiss. Each barrier has a number behind it, and each intervention responds directly to that number. What is give that is what it gives the framework to build its credibility. Moving ahead with the conclusion slide, I will leave you with one idea. ESG should not be treated as a compliance burden, it should be treated as a financial infrastructure, the same way we treat credit scores or the land records. When we invest in making the data verifiable, transparent, accessible, we are not just advancing sustainability, we are advancing the financial inclusion for you and me, for and every small and medium enterprises. And here, I would like to end my presentation signing off, Aprajita Shah, and I'm deeply honored for this opportunity.
Okay, participant, considering the financial and operational constraints faced by the Indian MSMEs or the South Asian MSMEs per se, how can a long or a low cost digital ESG compliance framework improve access to digital green credit without creating additional regulatory burdens?
Okay. Can I have a second to just recall my thoughts?
Yes.
Okay. So first of all, that I would start that as I already mentioned in my research paper, that there is the existing business records that bills and payrolls that should be recorded to create transparency among the businesses. Because if we even see in GST or other tax compliances, many of these the bills are repeated in one or the other times, and that creates to not such transparent transactions, and that would later on create a lot of compliances for both the government and the businesses. Then there is automated digital verification, which would again lead to transparency, and this altogether reduces the compliance cost for the businesses also, and also the government, who is trying to create a very automated digital verification. And this bridges the information asymmetry that sometimes if we see that the small businesses, they always do have that the data we do have is not matching with the data that government holds, and somehow we need to bridge the gap between these two information platforms. And further, I would also like to say that it supports financial inclusion without any additional regulation. When the framework leverages data MSMEs are already generated, so instead of adding any furthermore compliances or requirements, it should make a method to convert the existing records into a trusted ESG data for the green financing.
All right. Thank you for your presentation.
Thank you, sir.
Okay, we can move ahead with the next participant, please. Host, we can move ahead to the next participant.
Sure, sir. 1 second.
Dr. Bhavna, keep your presentation ready. We'll be calling you next immediately. Okay, yes, host, we can go to the next.
Next participant is Shaiki Moinen.
Yes, participant, you are not audible and visible.
I'm audible, sir.
Yes, yeah, you are audible. You can share your presentation.
Okay, I'm just sharing my screen. Is my screen is sharing?
No, it's not visible.
Okay, then let me check. Now, sir?
And your background noises is creating sounds. Yes, your screen is visible. You can start with your presentation. First, unmute yourself.
Is my PPT is visible, sir?
Yes, yes. Don't waste time. Just start.
Okay, sir. Here we will continue. One, two, three. Respected panels and my dear friends, today I'm here to present a remarkable topic. Its name is From Classroom to Sustainable Prosperity, evaluating the role of SDG in forestry, inclusive economic growth in India. So first of all, that we have to be understand what the mean by the SDC and what are the main factors and what how can we achieve education fully educated India and what are the process that have been taken under the SDG programs. So let's discuss about it. So first thing, so it's all about my central thesis of my paper. It's relatively related on the equal education, quality of the education in India, and how we can, how the education could be beneficial for the economic and the sustainable prosperity in India. As well, for the research process, I have used many further websites and the data taken by the Indian government websites and the UN websites also. So first thing that we have to be understand. So what is the SDG stands for? So initially it is started in 2025 by 15 by the UNO and its agenda to be to in future 2000 upcoming 2030 to fulfill or educate almost the population of the every country globally. So as per if we are seeing it is in India, so India has initially launched it and officially launched many schemes as we will further discuss on it. So first thing that what kind of the challenges that we see in India. So initially India has almost 1 billion people population and almost 250 million school are going undergoing in India. But there is a big problem that we can see in India is it have a different cultures and different multiple region and multiple languages across the nation. So that makes it very difficult for the nation to fulfill and they proceed the educational functionalities. So that way, furthermore, that we have to be know that the India have a almost 65% of the Indian youth are very well being for their educated. So they are waiting for the job. So further after that, we can discuss the what is the literature review and methodology I have used in my paper. So first thing that in we can here I am presented two theory. First one is human capital theory that said that education is equal to investment. So so two scientists that they suggest that if we are investing in the education, that will be beneficial for the upcoming generation. And another approach that has given by the Amartya Sen that is capitalist approach. That he said that furthermore than the education giving us in, if we invest in education, that will beneficial for the society, and it will also give freedom for the nation, for the citizens of the nation. So for the analytic approaches, I have used UNO and the Niti Aayog's data. First we have to be understand the what are the changes or what are the policies that have been taken by the government. The first thing and major thing that has taken under SDG 4 in India is NEP 2020, the policy that changed the 1986 previous or old policy of the education system. And furthermore, then they added the education strong, but initially it is not in perform since it has been launched. Next main program that led by the government is PM Poshan. That is that we can easily say that the midday meal program that given by the Indian government, and as well the Skill India program that targeted many that trained many peoples, and as well it
The participant,
gives
you can directly
many
move to the
concepts.
findings. You can directly move to the findings and solutions, which were
Okay,
put.
I'm going for that. So after saying this, what kind of the problem is still in our India? So the main thing that we have to that these programs initially affected on the primary basis, and it reduced the dropout, and it increased the literacy rate all over the India. But the main problem that we have to be understand that the India is providing its youth knowledge that is not applicable for what the industry is what the industry needed. So that makes them very problematic. We have to be change the study materials and the application that we are using in the in the in the skill based youth programs. These all things are improve the Indian youth programs, but initially that many challenges are still. So the main challenge is that we can say that the India is multiple regional state. So the main problem is that India, as for the state divergence, that we can see that the Kerala state in India has more than 95% literacy rate, and furthermore the Bihar. So there is a we can see that the simple K-shape graph that is very negative point for the India. And as for that, India has many problems as like gender inequality and the inequality in the education system, and and there are not sufficient teachers that they can develop the upcoming generations. So that we have to be work on these on things. So first
Participant,
thing
you had
that we have to
exceeded
be.
the time. Participant, you had exceeded the time. Kindly conclude.
Yes, it's last second last slide, sir. So we have to be, and we have to be furthermore change that we needed to we have to focus on the language and linguistics things, and we have to be we have to improve our foundation as well. We have needed quality teachers for the upcoming generation, and as well we have to be trained our upcoming the youth as the as the industries are needed for as the youth. So in short, sustainable prosperity depends not only on the getting children into classrooms, but on ensuring that meaningful learning, skill developed, and equal opportunity are available to all. That's it. Thank you for having me.
Okay. Participant, have you incorporated the recent reports on the sustainable development in your study?
My research are on base of the 2023 and for at last that is for 2023.
Okay, try to incorporate the recent reports on the sustainable development you can find on the SDGs, United Nations SDGs, right? There are a number of reports. Try to incorporate such reports in your study in order to know how the countries are working on it and what are the outcomes out of the out of the 6 years working till now. It has been incorporated on 2015 and of
Yes.
till 2020 there are consolidated data reports how it has been implemented so far, and in 2026 we
Yes.
can assess it in a better way. So try to incorporate all those studies in your revised manuscript submission.
Okay, I have
All
furthermore my main focus on 2015 to 2023 as well. I have also joined many recently added datas in the
all right.
as well in my
All right.
paper.
I'm telling you to incorporate all those required recent facts to it and come up with a comparative study how the SDGs has been implemented so far till now. That's what I meant to tell you. All right. Thank you for your presentation.
Okay, thank you, sir.
Okay. Yes, host, we can move ahead to the next participant.
So the next participant is Parul Shukla.
Yes.
Good evening, everyone. I'm just a second. Shares entire screen. Share. Right. Okay. Good evening, everyone. My name is Parul Shukla. I'm Assistant Professor of Law at Marwadi University, and today I'm going to present my paper on the topic The Regulatory Vacuum in AI Driven Commerce, a South Asian Perspective. First of all, I want to acknowledge and thank my co author, Vijayendra Sandilya, who is a fifth year BBA LLB student at IIM Rohtak. So, before starting, let me first introduce the topic. South Asia's digital economy is growing at a very fast speed. AI is also increasingly influencing this digital market, online market, but the regulations are growing with the regulations are not going at the same pace. This create an important challenge for fairness, competition, and inclusion. Our paper explores these challenges and and proposes a solution for the same. Now, let me address the elephant in the room. In South Asia is experiencing a digital boom, as you can see from the slide. In India's digital economy, India's GDP 7.5% is being contributed by digital economy. Over the period of time, we have also seen that the internet users have increased rapidly across countries like India, Bangladesh, Pakistan, and Sri Lanka. But AI driven commerce, it is increasing, it is contributing to the GDP, but it is not regulated fairly. And the worst affected stakeholder is the business, the gig workers, and the informal sector at the most. So, therefore, our research asks a substantial question: do current laws protect fair competition and consumer right, or do they create inequalities that hinder inclusive development? Now there is a regulatory deficit. There are few players or few large digital platforms which have enormous power. Their algorithm decide which seller would get the visibility, how much a price, how products are ranked, and what should be a price for a particular commodity. At the same time, there are three challenges which are being faced by the countries. Three challenges which are being faced. The first one is as you can see here, the first challenge is the platform. It operate across borders, so to regulate it, it is difficult. Second, government often lack technical expertise or capacity to monitor AI. And the third, state want to attract investment, but at the same time it also want to protect the domestic business. So no single country can solve this problem by proposing a regulation. It requires regional cooperation. Here we are proposing a ASEAN model. This ASEAN model, uh, digital economic framework agreement, it is based on three core principles. The first one is interoperability, which means common standard. Second is mutual recognition, where countries accept each other's system, and the third is a phased convergence, meaning gradual integration. This model balances everything, right? Now, there are two complementary. There are existing framework. First is India's Digital Competition Bill 2024, which was rolled back earlier. It was in the bill stage, then it was being sent for the public consultation, and then it was rolled back. This bill gives us the preliminary foundation, focuses mainly on competition, but it also does not focuses on AI governance. Secondly, the OECD AI principle, it promotes transparency, accountability, and human-centered AI. They both bring together a very strong foundation, but as the bill is already rolled back, we have nothing. Now, what we are proposing South Asian Digital Governance Compact, or SADGC. It is based on four core principles: institutional realism, incremental convergence, co-regulatory engagement, and political feasibility. And the most important thing is willing countries can move forward, even full country, even without the full regional consensus. Now it will be implemented in three pathway over the 10 year. From year 1 to 3, establish minimum standard and transparency requirement. Year 3 to 6, it introduce mutual recognition and code of conduct with support of international organization. And from year 6 to 10, it moved towards deep harmonization of competition law, AI governance, and labor standard, right? Then the next, equity at the core. What we are proposing, the people who are mostly affected by this regulatory gap are small business and gig worker. So the compact emphasizes algorithmic transparency for seller, a social protection baseline for platform workers, and flexible mutual recognition to prevent unfair competition. And now moving to the conclusion. See, we are not proposing any Brussels effect. We are not saying that whatever is happening in Europe, or we just need to cut, copy, paste the European law. What we are saying, the South Asia does not need to simply copy the European model. It needs an Asian inspired compact that is realistic and it suits to our regional condition. Our proposal rests on four pillars: common standard, co-regulation, mutual recognition, and phased convergence. The cost of inaction is increasing, and inclusive prosperity must remain at the heart of algorithmic economy. Thank you so much.
Okay, participant, do South Asian countries genuinely need dedicated AI regulatory framework? Like, do you think so? Or if the existing laws on consumer protections, e-commerce, competitions, and data protection adequately govern AI-driven economy and commerce?
Sir, thank you for your question. First of all, if you talk about Competition Act, if you talk about Consumer Protection Act or any other laws, sir, it does not recognize gig worker. Even for the matter of fact, our IT Act failed to recognize AI. We came up with DPDP Act. So rather than amending all this act to provide protection to gig worker, I believe it will be feasible to have an act which is best suited for the South Asian economy to protect gig workers, the sellers, from this inequality or disparity, because it take huge resources, time to amend the existing laws, and then these laws and we don't know whether these laws will still be equipped to suit the reality or not. And one more thing which we need to keep in our mind is that AI is not a static technology. AI is something dynamic which is evolving over the time. So rather than relying on the acts which are decades old or years old, let us have a regulation or a law which is an evolving regulation. So if the technology evolve, if today we are talking about the challenge of equity, or if we are talking about the challenge of algorithmic bias, and tomorrow the technology poses another challenge, so our framework should be equipped to evolve itself to solve the problem. That is my submission.
Okay, but there are a number of countries who has the laws, specific laws for the gig worker, but still there are a number of problems related to those laws, and there are a number of problems in the implementation. So
Right.
so my point is, like, you or like we as a researcher cannot come up and just blindly say that we need laws. We need to look into the pre-existing countries who is having such laws, and what are the flaws these countries are having in those laws. Then only we can come up with a better two-way suggestion, like, if we implement it, what are the problems we'll be facing it, and if we doesn't implement it, what are the major problem would be faced by the countries in South Asia. So try to
Right.
come up with a study which includes the countries who are having current framework, and also the countries who had implemented it for last, like, 10 years. There are countries who had these things who had implemented it for last 10 years. So you can like do such studies in order to understand how we can, as a South Asian country, can adopt it. All
Right.
right.
Thank you, sir, for the suggestion. I'll definitely incorporate it. The only thing which I want to throw light upon, sir, it takes us time to provide a labor code for the gig worker, even it is not implemented completely. So what I am proposing is, rather than copying any European model or the act law by the European country, what we can do is we can do a comparative study. We can, how our constitution is being made, like we have picked the best things from the constitution around the world. We can do that study, we can pick the best fundamental principle, and we should make a customized or a tailor made act which is feasible, which is best suited for our population, for
All right.
particularly for South Asian region. That's what I
Thank
want
you.
to
Thank
say.
you for your participation.
Thank you so much, sir. Thank you. Take care.
Yes. Host, we can move ahead to the next participant. Okay, Dr. Bhavna. We'll be moving ahead with Dr. Bhavna, host.
Sure, sir.
Um, I'm from Himachal, and right now I'm having very bad weather here. I'm trying to share my screen, but I'm still facing issues. Not able to share, and
Okay, Dr. Bhavna, if you are having issues with the sharing the screen, like you can present it right now, like
yes,
without
sir.
sharing a screen, and you can provide the PPT to the
Yes, I can.
secretary.
Yeah, can I present it without PPTs?
Yes, you can provide it without, you can present it without PPT, but you have to provide your PPT to the secretariat mail. Okay, we had lost our connection. Host, we can move with the next participant. She is facing extreme network
Sure,
issues.
sir. The next participant is Shivaranjani Iyer.
Okay, yes, participant, you can turn on your camera and unmute yourself. Participant, you are not audible and visible. Participant, you are not audible and visible. No, she is not audible and visible. Let's move to the next participant.
So the next participant is Naman Kulshresht.
Yes,
Good evening, sir.
yeah.
I hope I'm audible.
Yes, you are audible. You can share your presentation.
All right, sir. Um, so I hope my PPT is visible.
Yes, you can start.
Okay. So I would like to begin with the figure $5.7 trillion, dollars, the global MSME finance gap, with South Asia carrying nearly a fifth of regional GDP in it. For decades, governments have closed this the same way: unconditional subsidies, blanket guarantees, political generosity. My question: what if the states stopped acting like a welfare office and started acting like a sovereign investor? That's my thesis. The sovereign portfolio matrix, and I'll show you how it works. Why do well-intentioned subsidies fail so consistently? Three compounding reasons. Adverse selection. Capital handed out without underwriting, so strong firms self-select out, leaving subsidies financing the weakest. Moral hazard. Japan's credit guarantee research found full guarantees actually reduce lender monitoring and increased bad loans. And fiscal drain. Zombie firms stay alive, the tax base never grows, and that money could have built roads or schools. These are design problems, not funding ones. So, what replaces the old model? Sovereign venture capitalism. The state stops being a one time donor and becomes a disciplined, milestone driven investor. A venture fund with a public mission: non predatory, non controlling, non voting equity or revenue shares, no control, and an exit built in from day one. Israel's Yozma program built its venture ecosystem this way from scratch. Sweden's Salmon West does it today. The model works, South Asia just has not adopted it yet. Now, an investor needs an investor scorecard, not a budget line, like I said. So that for us is SRAR, the sovereign risk adjusted return. It sums the net jobs, formal tax-based growth, supply chain resilience, and fiscal return, and then discounts by a country-specific risk premium. The Greek weights are policy levels, so you can prioritize jobs in a recession, supply chains in a trade shock, and it's independently audited and published quarterly, so not self-reported by ministries seeking credit for their work. Now, how does state decide which firms get which instrument? We plot every MSME on two axes: operational viability, can it generate cash alone, and strategic importance, does it sit in agro-processing, renewables, or critical logistics? That gives four quadrants, each demanding a different instrument: equity, convertible notes, commercial debt, or a managed exit. Let's walk through each. So the top half of the matrix is of high strategic importance. Quadrant 1 are the yield drivers. They have proven unit economics in agro processing or logistics. A flat grant here is wasted overhead. Instead, equity for infrastructure swaps removes bottlenecks, exiting in 3 to 7 years at a market multiple. Quadrant 2 is incubation targets. Frontier ventures like climate resilient agriculture treated as patient venture capital. An example could be Bangladesh's Startup Bangladesh program, which converts pre-seed grants to equity once a startup hits its revenue milestone. The bottom half is of lower strategic importance. Quadrant 3 is the cash cows, profitable retail or trading firms that need the state to step back, not chase them. Priced commercial debt, banks holding first loss, and then a fast exit to private credit. Quadrant 4 is the divestiture zone, today's zombie firm welfare recipients. The matrix manages a structured drawdown instead of pulling the plug overnight, redirecting funds into worker retraining. This is where political courage gets tested. Now, how is this discipline enforced in real life? So we have two mechanics for that, uh, two systems for that. First is stage gate financing, like private equity. So tranche one is seed, small convertible notes for 6 to 12 months to provide to prove the concept. SIDBI seed fund incubators scaled from one startup to over 17 under a year with this. Tranche two growth, capital tied to hard, independently certified KPIs with automatic stops on missed targets. Tranche three scale, mezzanine debt or minority equity carrying the firm to IPO model on the US SDIC program. Often an MSME's real constraint isn't cash, it's infrastructure, cold storage, warehousing, production nodes. It could never finance alone. The equity for infrastructure swap solves this. The state builds assets through a
Okay,
special purpose
participant,
vehicle.
you can move to the recommendations and solutions part.
Yes, sir. Sir, just one second. This is second last slide. So this is the government constructs an asset through the special purpose vehicle, and the MSME cluster repays through a capped non-voting revenue share, not debt, which is they basically never lose their control, and the stake stays non-voting. Upside is capped, and there's a buyback formula which is pre-agreed. SIDBI's cluster development fund already uses this plan. Now, none of this works without legal scaffolding. In India, courts can rule a heavily state-funded firm a straight instrumentality, dragging routine decisions of a small MSME into constitutional litigation. The fix is non-voting shares. States capped at 49%, so they don't control the MSME. Startup Bangladesh's formula basically. Decisions must sit with independent investment committees and not ministries, like Sweden's Saminvest program. And South Korea's Mote Fund shows what happens when you don't have this kind of legal scaffolding, as I suggested. So, not bigger governments, not smarter governments, capital that catalyzes and then gets out of the way. That's my presentation. Thank you, sir.
Okay, participant, if public subsidies begin to resemble private equity investment, how do you justify supporting MSMEs that generate significant social value but offer low measurable financial return?
So I presented a formula for this. So when I talk about an MSME, there are a lot of MSMEs that add to the society as a whole. They have a lot of social spillovers, but oftentimes they are not able to reflect that on the financial end, and that ends up costing the government a lot of money. And MSMEs shut down within a few years with no financial returns for the government. So essentially, that subsidy which the government invested with the plans of scaling it is wasted. By adopting this private equity model, I'm not saying that the government gets all crony capitalistic and it is going to support the ones with the money. But it's basically like the government has a security that the business, the MSME, is going to perform in the long run. And the formula, the SRAR, it has everything that it could possibly need. There are net jobs, the tax-based improvement, supply chain resilience, and fiscal return. So it takes into account not just the accounting profits of a firm, but all the spillovers that it is going to have on a community.
Okay, all right. Thank you for your presentation.
Thank you so much, sir. Thank you for your question.
Now we can move ahead to Dr. Bhavna. Okay, yes.
All, I'm extremely very sorry from my end for this inconvenience. So I'm going to present my ideas or my research under the title Climate, Crops and Communities, an empirical analysis of sustainable agriculture and rural development in the state of Himachal Pradesh. So when we talk about the agriculture, we are well aware that it continues to be the backbone of not only of India, but in fact of every country of the world. So livelihood and economic security, it's livelihood and economic security to millions of people. However, agriculture today faces several challenges, including climate change, declining soil fertility, water scarcity, biodiversity loss, and rising production costs. These challenges are particularly significant in hilly areas like state of Himachal Pradesh, where rural communities remain heavily dependent on agriculture, and we are having extreme geographical conditions. So, in this context, sustainable agriculture has emerged as an important approach that seeks to balance economic productivity, environmental conservation, and social welfare. Sustainable agricultural practices such as organic farming, crop diversification, integrated nutrient management, water conservation, and climate resilient farming are increasingly being promoted as solution to both environmental and developmental challenges. The primary objective of my study was to examine whether sustainable agriculture contributes to rural development in Himachal Pradesh. Specifically, the study aims to assess the awareness levels, adoption patterns, impacts on livelihoods, and challenges faced by the rural stakeholders in the state of Himachal Pradesh. So, for this study, I have chosen 287 respondents, basically including farmers, women farmers, agricultural laborers, rural households, and rural youth. Data were collected through structured questionnaires and semi-structured interviews using a mixed method approach. So, regarding the demographic profile, farmers constituted the largest group of my study, followed by the women farmers. To have a proper balance about my study, because women farmers plays a very important role in the geography of Himachal Pradesh. So, when respondents were asked about awareness of sustainable agriculture, the findings were encouraging because approximately 68.3% of the respondents reported moderate to high awareness of sustainable farming methods. This indicates that sustainable agriculture has gained considerable visibility among rural communities in Himachal Pradesh. And Similarly, adoption levels were also promising. About 70% of the respondents reported either regular or occasional adoption of sustainable agricultural practices. And when we talk about the sustainable agricultural productivity, nearly 69.3% of the respondents reported moderate to significant improvements in agricultural productivity. And with respect to household income and livelihood security, around 68% of the respondents reported positive response and economic impact in this regard. So this study further explored broader rural development outcomes. A substantial majority of respondents agreed that sustainable agriculture improves environmental conservation, strengthens food security, enhances community participation, creates employment opportunities, and support overall rural development. Most notably, almost 80% of the respondents believed that sustainable agriculture contributes directly to rural development. So, an important finding of the study was the significant role played by the women farmers and the rural youth. Women emerged as the active participants in sustainable farming initiatives, while rural youth showed increasing interest in technology enabled and environmental friendly agricultural practices. So, based on these findings, the study proposes several policy recommendations, and these include strengthening agricultural extension services, providing financial incentives and subsidized credits, developing markets for sustainable products, promoting women's agriculture empowerment, encouraging youth agricultural entrepreneurship, and expanding climate smart agricultural planning. So, to conclude, when we talk about the sustainable agricultural development, it is not environmental strategy only. It is a comprehensive pathway towards economic development, social inclusion, environmental sustainability. Because the my study shows that it confirms, in fact, positive impacts on productivity, income, food security, community participation, and rural resilience. Therefore, investments in sustainable agriculture are essential not only for achieving agricultural sustainability but also for fostering inclusive and resilient rural development in India. Thank you very much for the cooperation and giving me this opportunity to present my paper in this condition also. So I'm looking forward for your questions and suggestions. Thank you so much.
Okay, participant, I have one important question for you. If sustainable agriculture often involves higher initial cost and slower return, how can policymakers encourage widespread adoption of such sustainable farming or agriculture among the resource constrained rural farmer?
Actually, basically, Himachal is one of the state that has used all kinds of insecticides and pesticides to the maximum limits. Whether we are talking about the horticulture or in the lower Himachal, we are talking about the agriculture. And now, basically, we are facing the consequences of the excess budgets of using of those pesticides and insecticides. That's why many of the farmers, in fact, those farmers are including, they are quite educated. I'll say they are convent educated, they are graduate, they are postgraduates, and now they are adopting these sustainable agricultural or horticultural practices. So I think that we have to include certain policy of we have to I think make certain policies, because in the initial stages also, when we were talking about the agriculture, we had provided seeds at the subsidized cost to the farmers, and we have like sabzi mandis. Especially in the Himachals, cooperative societies are working in this direction, where they take these products from the farmers at a certain MRPs. So I think we can make policies in that direction, and the government can take steps to give incentives to the this sustainable agricultural practices.
Okay, now like there are two suggestions for your paper to dealt with. First, when we
Mhm.
see that the changes from normal agricultural practices to the sustainable, we can refer to the countries like Germany and the European countries, where they had initiated this in last 1990s and 2000, in the 21st century itself, in the beginning of 21st century itself. But they had faced a lot of things like a food crisis and the other, because when you looked into the sustainability, it has to be in a way that you cannot hamper the natural process. And one of the major challenges of sustainability and the sustainable practice is initially you have to suffer with the food crisis and the other things related to it. So how to tackle up with all those needs to a proper assessment. Like you can refer to this case study of those countries who has implemented a sustainable development and how they are tackled with this kind of policy constraint. These are the policy constraint which after implementation, like the post implementation, these are the challenges which every country has to be faced. This is first point which I'd be willing you to look into in your paper. And the second point is like nowadays there are a number of South Asian countries who had come up over the threshold of using the pesticides, insecticides, and all inorganic farming practices, where the quality of the food has been degraded in such a manner that even our exports or even the productions which majorly many countries used to take it as their import, but those countries are not taking up further. We have newses that Japan has stopped taking some of our Indian export agricultural item, just owing to the concern that they had not cope up with the standard of their food safety. So these are the two aspects of your paper has to be dealt with in relation to the policy, and you can do your further research upon it for your fine revised manuscript submission.
Okay, thank you very much, sir. Thank you for the cooperation.
Okay, thank you. But do not forget to mail it to the secretariat regarding your presentation slide.
That I have already posted, but I will email it once again.
Okay, all
Thank you,
right.
sir.
Yes, we can move ahead to the next participant host.
Am I audible?
Yes,
Hello.
yeah, yeah, you are audible,
Okay.
but you are not visible. Participant, you are not visible.
Yes, I'm just connecting. So am I visible now?
Yes, you are visible. Okay, you can share your presentation.
Is my screen shared?
Yours, yeah, your screen is shared, but your presentation is not visible.
Um, is it visible now?
Your screen is visible, your presentation is not. You have not provided permission to the whole screen. All the participants, keep your presentation loaded. It takes time. Okay, participant, kindly be fast. We had already exceeded time.
So sorry, sir. Is it visible now, sir?
Yes, it's visible. You can start.
Okay. So, good evening to everyone present, and I'm so sorry for the delay. The topic of my presentation is Neighbors in Name, Strangers in Trade, Reimagining South Asian Regional Trade Integration in an Era of Geopolitical Flux. The title of the presentation itself is a question that came to my mind, and I had asked myself that are South Asian nations just neighbors in name, and do we become strangers all of a sudden when it comes to trade? With regards to this question, I had posed three more questions, which acted as the primary questions for this study as well. One is that why does South Asia remain one of the least economically integrated regions in the world, despite its geographical proximity, cultural ties, and historical commercial interconnectedness? Second is that are current barriers to regional trade primarily economic, or are they also rooted in political and institutional factors such as security tensions or state protectionism? Third, can South Asia's historical experience of commercial integration provide a practical foundation for renewed regional cooperation in the 21st century? So, accordingly, I have taken a historical approach, a qualitative comparative analysis to answer these questions. Now, the paradox that we have in front of us is that South Asia has nearly 1.9 billion population, and it is home to some of the world's fastest growing economies. Yet, if we look at the intra-regional trade, it is only about 5 to 6% of its total trade. And when we compare this data to ASEAN, it is 25%, and for European Union, it is 60%. The World Bank estimates that South Asia trades less than 10% of its total potential, and we lose approximately $23 billion annually in unrealized trade opportunities. Now, this paper also argues that this problem or trade deficit is not primarily economic, as one would assume, but it is also a problem of political economy. This brings me to the next section of the presentation related to the long memory of commerce that we have had. Tracing from the earliest times as well, if I have to focus on the subcontinent and its past, we have the earliest evidence of overseas trade happening in the Mauryan times from circa 4th century to the 2nd century BCE. We have an excellent treatise on statecraft, the Arthashastra, attributed to the school of Kautilya, which has specific sections dedicated to commerce, economy, and trade regulations, from metallurgy to even the superintendent who has to regulate trading activities. There are details regarding everything. There is a specific term which I want to focus on, which is Shrenis, or the merchants' guilds. And this is important since many scholars, including Romila Thapar, um, um, Ranabir Chakravarti, and K.N. Chaudhary, have worked upon in terms of trade and trade routes in early India. Now, when it comes to these commercial linkages, we see that the subcontinent and beyond have been trading for a very long time in an extensive manner. And this pattern has been continued even in the early medieval and the medieval times. At the apogee of the Mughal Empire, we see that attempts were being made to create an integrated market system, with the rupaya or the silver coin being used as a standardized currency. In fact, even in the Khilji's time, we see that a uniform market regulation was being introduced. Now, this trend of integration and trade and exchange amongst India and its neighboring regions have been going on for a very long time, but it came to a halt, or we can say it was disrupted in between with the advent of the colonial rule. The colonial state was instrumental in bringing in infrastructural changes like that of railways and telegram. But these changes did not necessarily necessitate a change, positive change towards greater trade between these regions, but it was done to primarily exploit and have a trade which was
Participant, you had exceeded time. You can move to the recommendation and conclusion.
okay, sir. So the point I was trying to make is that the colonial disruptions had transformed the historical trade routes, and it had weakened the intra-regional economic linkages, which were already there. This is a map which shows the trade between different regions in South Asia. And this is the final part, the part of recommendation which I wanted to talk about. So, the tripartite framework focuses on a renewed integration. And here, there is I talk about the three pillars. One, it is related to connectivity led pragmatism. That in an era of physical and digital connectivity, investments as the primary instrument of integration rather than treaty based tariff schedules, it remains hostage to political cycles. So we have to move beyond that. There are project specific connectivity cooperations that can proceed even when broader political conditions are unfavorable. Now, this requires us to focus on the completion and expansion of, say, rail corridors, many of which trace the roots of pre-colonial overland trade as well. A regional payment architecture, which is modeled loosely on Asia's multilateral cross-border QR payment linkages that would enable real-time settlement of trade transactions in local currencies. The second suggestion is related to political de-risking through phased trust building. We have the pertinent issue of India-Pakistan bilateral relations, and that cannot be circumvented indefinitely. But a phased approach to the trade normalization would begin with sectors of low political sensitivity, cross-border tourism, pharmaceutical trade, and even trade related to medicine and the biological sector before we progress into the more contested domains. The 1960 Indus Water Treaty, which was negotiated at the height of the Cold War, is an example for the same. The third pillar is related to inclusive and employment-sensitive trade policy. It focuses on how women constitute a significant proportion of the workforce in South Asia's most trade-exposed sectors: garments in Bangladesh, agricultural processing in Sri Lanka, handloom weaving industry in India. Yet when it comes to their participation in the formal cross-border trade, it is constrained by financial exclusions and mobility restrictions. Gender-responsive trade facilitation would create institutional mechanisms to ensure that the reduction of trade cost
Participant
disproportionately
kindly
benefits the
continue.
significant benefits the segment of the workforce bearing the highest current complaints burdens. So I would like to end with the question that can a region once connected by trade, mobility and culture rediscover integration in the 21st century? And I would want everyone to think about this further. Thank you so much for giving me this opportunity. These are my references.
Okay. So, participant, my question to you is despite geographical proximity and cultural linkage, why does South Asia remain one of the least economically integrated region in the world? And what reforms are necessary to revive this trend?
So, sir, we see that there are natural conditions which are already there, which makes it conducive for South Asian states to trade with each other. But it is only in the post-colonial time, after the Radcliffe Commission had made the lines after 1947, that such strict border restrictions were brought in. So, if we were to think of trade, or if we were to reimagine trade in contemporary times, I would say that we have to think beyond political borders, beyond immediate geographical borders for trade to successfully flourish. Another constraint that comes to my mind is the political anxieties that have been created in the recent past, that the many wars that India and Pakistan have had, or even the strategic alliances that South Asian nations have made with each other. It creates problems for some while it benefits others. For example, Nepal has a potential for hydropower, but that hydropower is also that India providing that hydropower electricity to Nepal is also restricted by the fact that Nepal has relations with other nations. So bilateral treaties are not neatly being formulated in today's time because of political contentions. So I would say that the fertile ground for trade is already there because of shared history, culture, shared geography, but
All right,
political
participant.
anxieties and strategy.
Okay. Okay. Participant, thank you for your
Creates a
presentation.
constraint. Yes, sir.
Okay, thank you for your presentation. We can move ahead with the next participant host.
Yes, sir. Am I audible and visible?
Yes, you are audible and visible. Tamanna Jaswal, yes.
Yes, sir.
All the participant who is present here, keep your PPT loaded.
So please, can you tell me, is my PPT visible as well?
Yes, it's visible. You can
Oh,
start your presentation.
yes, sir. Good evening, everyone. I am Tamana Jaiswal, a second year computer science engineering student from MIT ADT University, Pune. And today I am going to present on my topic Beyond Technological Transformation, the Mycelia Nexus Framework for Human Centric Biophilic Digital Transformation. So let's get started. So, first, let's understand the transformation paradox. So, we have observed that many big organizations available in different sectors, different fields, have invested more in today's world in artificial intelligence, automation, cloud computing, infrastructural development, and digitalization. Yet, organizations still continue to face some of the major issues, that is, burnout, increment amongst employees, resistance to changes to the technologies and modernizations, digital fatigue, as well as transformation failure. And the key statistics that support what I'm saying is given here, that 70% of the digital transformation programs have not yet met their objectives for which they were aiming. Even the failure rate has increased to 84%, and 53.78% businesses have reported that digital transformation has almost no impact to their business model. Now let's understand why this is so. Why digital transformation is not having the impact that it was perceived to have, and why the failure rate is so high. This is because of the research gap, and this is what we are working on. So let's first understand what's traditional digital transformation that it actually is working on in today's world. So organizations have somewhat misunderstood the meaning of digital transformation, where they understand digital transformation as a technology focused transformation where investments will be made solely on technology, automation, and infrastructure. While this is true, this is not the entire image, because along with technology, human centric design and human centric investment is also one of the core pillars for digital transformations. And this is where we are working with Mycelia Nexus framework, a new framework that I am supporting and proposing, where apart from only being technology focused, we will be human centric. We will be focusing along with efficiency as well as well being of the employees, with continuous adaptation as well as employee being treated as participants rather than as end users of the technological changes and modernizations. Now let's understand the mycelial nexus framework. So mycelial nexus is a human-centric biophilic digital transformation model where we'll be working on employee well-being. That is, our main aim will be reduction of burnout and stress rate, increment of employee participation by taking in feedbacks and taking into consideration their pain points and working on it, psychological safety and work-life balance, along with digitalization, automation in areas like AI and cloud, adaptive governance following the agile methodology, continuous implementation, as well as working with biophilic workplace design. And when I say biophilic workplace design, there is a cause why I'm saying so. Let's understand why employee well-being matters first. Only 23% of the employees worldwide are engaged in their work, and digital fatigue has become a major concern because it has negatively impacted the employees' productivity, psychology, and creativity. Now, let's understand this transformation failure cycle. Burnout, when fed by the employees, causes disengagement to work, which causes resistance to any changes in modernization or automation, causing low adaptation to changes and hence transformation failure. Because an employee, if they are being able to produce, if they are capable of creating and innovating, and if these rates are high, this will directly impact the business value for a long run, which will cause strong competition in market and ultimately positively affect the economy. And this is why instead of treating employee as only a HR concern or only as an optional requirement, we should treat employees as human capital,
one of the four core pillars along with technology, automation, and infrastructure. Now, implementation methodology for mycelial access. So, as I already said earlier, we will be having a phased continuous implementation model. With each and every phase, we'll be working with planning, employee communication about schedule and changes, design and parallel implementation, pilot testing, providing a 2 month stabilization period where employees are able to adapt to technology, reducing the
Okay,
resistance to.
participant, you can move to the recommendations. You have just
Sure.
1 minute left.
Okay, sir. Yes, sir. So the recommendations here I'm proposing with mycelial nexus is that because instead of treating employees only as an optional HR concern, we are treating them as major contributors to economy and as investment to human capital. Because here investment being made in AI, cloud, employee training, biophilic system, and governance will give us returns as reduced burnout, employee productivity increment, high employee retention, faster decision making, and innovation capacity, resulting into a sustainable long-term economic value creation. And instead of measuring the success only in terms of advancements in technology, we are also measuring it in terms of employee well-being and long-term organization resilience. So I would like to conclude by saying digital transformation will only succeed when we treat employees not as an additional expense, but when we treat them as human capitals. And an investment made to a human capital will always impact the economy for the betterment. Human well-being is not an expense, it's an investment for long-term economical success. Thank you, and I'm open to questions.
Okay, participant, I have one question for you specifically. Given the digital transformation is often driven by efficiency and profit objectives, how can organizations justify adopting a biophilic human-centric framework that may not yield immediate economic returns?
Yes, sir. So, as in the question itself, you have said that digital transformation often deals with profitability. And when we are working with profitability, the first concern is that who are the ones producing this profitability? Employees. And if employee well being is not treated as one of the major concerns, which we are treating here with the help of biophilic environment, which boosts not only their creativity but also their innovation capacity, a direct investment being made to employees will be causing productivity, creativity, and innovation high rates, causing strong business value as well as strong competition in market, and ultimately affecting the economy for betterment, causing profitability as well as sustainable long-term economic value.
All right. Thank you for your presentation.
Thank you, sir.
We can move ahead with the next participant host.
Hello, sir. I hope I'm visible and audible.
Yes, you are visible and audible.
I hope that my screen is also visible.
Yes, it's visible. You can start.
Yes. So, hello everyone. I'm Nehal Sharma and I'll be presenting my paper, The Ghost Economy. I would like you to close your eyes for a moment and picture a market, hundred of traders, goods moving across borders, price negotiating, money changing hands. Now, open your eyes. The market exists. It moves billions of dollars every year. And it runs entirely through WhatsApp. Now, one transaction appears in any database of OECD, UNIDO, or SAARC. Now, this paper talks about three questions that nobody has put together before. What is ghost economy? How large is it? How is it financed? What does it tell us about remittance flow? And how is it misleading for us for decades? Can we build a governance framework which is visible and without destroying the current flow that is going on? The answer is yes. So I would like you to look at the bar graph over here. India and Bangladesh, which is South Asia's biggest corridor. Now, informal trade is nearly half of the formal volume, $9 billion, not counted, not taxed, not supported by any framework in this room. Now, this donut looking structure, 35% of intra SARC trade is invisible. That's not rounding error, that's a structural feature. And around $189 billion in annual remittance flow across this region, bigger than the total FDI. Hold that number. I'll come back to it later. Now let's take a hypothetical situation. Let's say a trader in Meghalaya opens a WhatsApp group, 200 members, all vetted by reputation. He posts a picture of handicrafts. Three buyers in Dhaka respond with voice notes. Video call to confirm the quality. Price is agreed. No contracts, no custom declarations, no bank transfer. This market has its own price discovery, trust hierarchy, and dispute resolutions. They trust reputation, not codes. They're not chaotic black markets, they're sophisticated self governing economies. They simply govern outside the visibility of the state. Now, let's say, how does that $189 billion flow? Now, let's say there's a trader in Nepal who wants to buy goods from Chennai. He doesn't pay through banks. What he does is he sends the money to his family member, which looks like a personal remittance, and the family member gives the money to the supplier through to cash or goods. Now, the transfer that was done, it is registered as a household welfare under the central bank. This is functionally a trade payment. Every central bank in South Asia collects this data. Through this paper, I would like to show that this contains embedded trade signals that nobody has read through a trade government lens. The data exists, but the framework does not. Now, what does the policies do about it? They cannot do anything about it because it doesn't exist. Now, SAFT requires custom documentations, but WhatsApp traders generate zero. WTO trade facilitate agreements repurposes custom footprints, but the ghost economy has none. E-commerce framework are built for Amazon and Alibaba. Peer messaging architecture is invisible to them. The ghost economy is merely invisible to the state. It is consecutively excluded from the benefits of the statehood. Now, how is it different from the other countries? So, the other developed countries, what they do is they have this whole system built, which they hide their trades from India when they're doing their deals and this thing. And what they do is they set up private servers in New York, London, and Brussels, in SWIFTs, Western Unions, and WISE, and which do not get shared by trade monitoring. So through this, there's like a whole chain of network which kind of excludes the minor dealing sectors and which is not visible to the state. Now, the solution of this is ATI. Now, ATI is Adaptive Tariff Intelligence Framework, and we would work on three principles on it. First would be make ghost economy legible, not criminally, but informally. It is rational when compliance costs are more prohibitive and generalized. Use central banks data that are already there. No new surveillance, just ask or a burden on the trader, just a new lens to look at things and calibrate responses. So there's a difference between micro traders and large scale traders, so we'll monitor them differently. So there's also a chart over here. The current infrastructure of how trade gets done is through the red line, and if we use the ATI structure, which some countries are, then it would be as the blue line that is shown here. Then there are two methodologies that we can go about. One is the quantitative, the other one is qualitative. The quantitative is second literature, WhatsApp commerce network documentation across India and Bangladesh, India and Nepal, regulatory analysis of RBI, Bangladesh Bank, fintech sandboxes. Quantitative would be World Bank remittance corridors from 2018 to 2023, ABD informal trade estimations, remittance FTI coalition across Nepal, Bangladesh, Sri Lanka. No primary field work because the data is already there. We just have to read through it and come up with solution through that data which already exists. Now, there's some policy recommendation that I would like to give is SAARC should add the ghost economy to the SAFT
Participant,
review.
move to the conclusion. You have just 1 minute left.
Yes, sir. They should add it to their SAFT review agenda. 30 to 40% of intra-regional trade. It should be in the conversation. RBI and Bangladesh banks, the bilateral resistance data sharing protocol. The data is there. It will just do itself. The OECD and UNID, the trade transparency infrastructure is exactly what ATI needs with BEPS framework and AEIO standard. We're not asking for new money. It's just a new lens, a new data, the data that already exists, a new way of looking at it. Now, the ghost economy is not a failure of South Asian commerce. It is in many aspects a triumph. A task of governments is not to punish the integrity, it is to meet it. South Asia, greatest trade route, has no custom posts, no tariff schedules, no entry in any official database. It runs all through a smartphone. Thank you so much. I'm open to questions.
Okay, like what do you understand how World Trade Organization or the organization which is associated with the WIPO can come up for the settlements of this kind of issues?
So what they do is WTA and OECD trade. What they do is they have trade transparency standards. IMF balance of payments methodology. So what they do is they take the money, they hide it into secular bank, and which is tariffed also. And when this favor becomes global, they do not see the informal digital trade that happens through it. So it's kind of like a structure, like an Amazon structure. So the more you buy, the more you see through it. That's how they do it. And in India, what we do is we just see the bulk buyers that are there, but then because of that, we skip out the small towns that also do this and have a generational amount of flow coming in through them.
See, for assessing that's kind of policy evolution, even like for policy examination is required. And for that, there are two suggestions for your paper. You should go into the OECD like reports of 2024 to 2026 regarding the digital trade networks and the remittance systems, which has been like time and again they had recommend. Also, like you can look into the protocols established, international protocols regarding to the digital trade, in order to assess that how effectively the recommendations is working upon those countries where they had implemented it. And also the major challenges here is that the whole system is reviving in a way that it is reviving for the first time. So they also don't know what are the challenges these countries would be facing. So you have to
Yes, sir.
come up with those things in your paper, in
Yes,
your
sir.
revised manuscript submission.
Yes, sir.
All right. Thank you for your presentation.
Thank you, sir.
Okay, yeah. We can move ahead to the next participant host.
Good evening, sir.
Yes. Good evening. Participant, kindly share your presentation.
Yes, sir.
Yes, you can start with your presentation.
Good evening, everyone. I am Alfia. I am co-authored with Ashwa. I am from Shri Krishna Arts and Science College, Coimbatore. My paper presents a comparative study of artificial intelligence, machine learning, and deep learning. Um, the, these three terms are different, not the same. Artificial intelligence builds systems that think like humans. Machine learning is a subset of artificial intelligence. Machines learn from data through programmed. Deep learning is a subset of machine learning. It uses a neural networks to learn automatically. The relationship is the deep learning is inside machine learning, which uses inside artificial intelligence. And I'm moving to historical evolutions. um, it has three phases. From 1950 to 80s, the rule-based AI rigid and limited. From 1990s to 2000s, machine learning introduced data-driven learning using algorithms like SVM and decision trees. From 2010 onwards, GPUs and big data enabled deep learning. Models like CNNs and transformers reach human-level performance. And I'm moving to key algorithms. And I'm moving to key algorithms. Artificial intelligence uses search algorithms and expert systems. ML uses decision trees, SVM, and k-means. Deep learning uses CNNs for images, LSTMs for speech and sequences, and transformers like BERT and GPT for language tasks. And I'm moving to comparative analysis. AI needs less data and is easy to interpret. Machine learning needs moderate data and balances performance with interpretability. Deep learning needs very high data and compute, but automates everything. And higher performance means lower interpretability. And I'm moving to applications. In healthcare, artificial intelligence is used for diagnosis tools, machine learning for disk prediction, deep learning for medical image analysis. In finance, fraud detection, credit scoring, market production. Similar patterns in education, robotics, and manufacturing. And I'm moving to challenges. Five challenges: data dependency, interpretability, and Deep learning is a black box, high computational cost, poor generalization on real world data, and bias in model outputs. Explainable AI is the active solution for interoperability. And I'm moving to future scopes. There are four directions: explainable AI for transparency, hybrid intelligence combining rules with neural learning, edge and federated learning for on device privacy, safe AI, and multimodal models that handle text, image, and audio together. And I'm moving to my conclusion. Artificial intelligence, machine learning, and deep learning are complementary, not competing. Together, they form the foundation of modern intelligence systems. The right choice depends on the problem, data, and computational resources available. Thank you.
Okay, participant, what are the country-based studies you have done for your paper?
Um, so
Like, have you done any country-specific studies, like
based sorry sir, I
Yes,
couldn't hear you.
I'm asking you whether you have done any of the country-specific studies with your
No
study,
sir.
like with your. Am I audible? Am I audible to you?
Yes sir. Yes sir.
Okay, I'm asking you whether you have performed or you have done any country-specific study
No
regarding the
sir.
data your study. Okay, all right. So there are two suggestions for your paper. Your paper lacks the policy recommendations regarding your deep learning and artificial intelligence mechanisms. It's technical. It's related to technical, but it lacks the policy recommendations. So you should come up with a comparative study of number of countries who are working on these subjects, and they are working like how that implemented such policies and what are the required need of the policy in future, what are the specific policy which should be done. So incorporate this in your revised manuscript submissions.
Sure sir.
All right, thank you for your presentation.
Thank you sir.
Yes, we can move ahead with the next participant. We can move ahead to the next participant host.
Hello. Yeah.
Yes,
Is my screen visible?
yes, it's visible and you are audible. You can start.
Yeah. Okay. So good evening. Firstly, I would like to thank the panel for having me here. I am presenting my paper titled "When Oil Bleeds, the Rupee Weakens," where I'm assessing the impact of crude price shocks and geopolitical risk on India's foreign exchange market. So, exchange rate stability is a critical determinant of macroeconomic performance because it influences in trade, inflation, foreign investment, and external sector resilience. For India, this issue is particularly important because the economy remains highly dependent on imported crude oil, with more than 85% of domestic crude oil requirements sourced from international markets. Existing literature has established relationships between oil prices and exchange rates, as well as between geopolitical uncertainty and financial market outcomes. However, most studies examine these factors independently or focus on single crisis episodes. This study seeks to bridge that gap by examining how crude oil prices, geopolitical risk, dollar strength, monetary policy, and inflation jointly affect USD INR exchange rate. To address this question, I constructed a monthly data set consisting of 102 observations, which I obtained from the Bloomberg terminal between January of 2018 and June of 2026. The dependent variable is the USD INR exchange rate. The explanatory variables include crude oil prices, represented by Bloomberg's CL1 contract, the US dollar index or DXY, the federal funds target rate, inflation indicators, geopolitical risk, and Indian bond yields. Methodologically, the analysis employs a vector autoregression framework alongside a GARCH 1.1 specification. The VAR framework was selected because exchange rate determination involves simultaneous interactions among oil prices, monetary conditions, geopolitical shocks, and investor behavior. Treating these variables as jointly endogenous allows the analysis to capture dynamic feedback effects that conventional single equation models may overlook. The Garch model was employed to analyze volatility persistence and to determine whether geopolitical crises generate temporary disturbances or more prolonged periods of uncertainty within the foreign exchange market. Additionally, I divided the sample into 6 distinct geopolitical and macroeconomic regimes to examine how exchange rate dynamics evolved across successive crises. The regime analysis reveals one of the most interesting findings of the study. Prior to COVID 19, the average USD INR exchange rate was 69.6 rupees per dollar. During the pandemic, it was 74.5 rupees per dollar. During the Russia Ukraine conflict, it rose to 79.2. During the West Asia conflict, it reached an average of 83.2. And during the US Iran conflict, the average approached 89.5 rupees per dollar with peaks at around 95 rupees. What is particularly noteworthy is that the highest exchange rate level occurred during the US Iran conflict, despite oil prices being substantially lower than during the Russia Ukraine conflict. To give a example, during the Russia Ukraine conflict, it peaked at around $111 per barrel, and during the US Iran conflict, it was much lower at around $80 to $90. If oil prices alone determined the exchange rate outcomes, one would expect an opposite pattern to happen. Instead, the evidence suggests that successive geopolitical shocks generate cumulative effects through investor sentiment, capital flow reallocation, and safe haven dollar demand. So I describe this pattern as the rupee ratchet effect. The central idea is that each major geopolitical crisis appears to establish a progressively weaker exchange rate following a shock. The rupee exhibits evidence of partial permanence in its depreciation. While the paper doesn't formally estimate structural break models, the observed regime shifts provide an empirical basis for future investigation. The econometric analysis provides strong support for the study's hypothesis. Beginning with crude oil, the VAR results indicate that oil price shocks Granger cause movements in the exchange rate at 1 and 3 month horizons. A one standard deviation increase in crude oil generates approximately 0.9 rupees to 1.3 rupees of depreciation, with the effects persisting for as long as 9 months. So this finding is consistent with the current account transmission mechanism emphasized in a previous literature. The geopolitical risk index demonstrates a faster transmission channel. Increases in geopolitical risk generate immediate appreciation of the dollar index and encourage capital reallocation towards safer assets. The dollar index itself emerges as one of the strongest determinants of exchange rate movements. The results indicate that dollar strength functions as a key transmission mechanism through which geopolitical uncertainty affects the rupee. The federal funds target rate exhibits the strongest correlation with USD INR at 0.677. This finding highlights the importance of global monetary conditions. During the Federal Reserve's tightening cycle between 2022 and 23, policy rates increased from 0.25 to 5.5%, while the rupee weakened from 74 rupees to 83 per dollar. Inflation differentials were also found to be significant at longer horizons, supporting purchasing power parity arguments regarding medium-term exchange rate adjustment. In terms of volatility, the Garch results reveal substantial persistence with the combined Arch and Garch coefficients approaching unity. The three major volatility regimes correspond closely with each of the three conflicts: Russia, Ukraine, West Asia, and US Iran.
Okay, participant, you can move to the recommendations and your solutions towards it.
Yes. So this study is making three primary contributions. First, it provides a unified framework integrating crude oil prices, geopolitical risk, dollar strength, monetary policy, and inflation into single empirical analysis. Second, it extends existing literature. Third, it introduces the concept of rupee ratchet effect. The findings also suggest that India's exchange rate vulnerability cannot be understood solely through oil prices. Global monetary conditions and safe haven dollar dynamics appear equally important. Future research could formally test this rupee ratchet hypothesis, and it would also be valuable to examine whether India's growing use of rupee denominated oil trade alters the traditional oil to exchange rate transmission mechanism. To conclude, the evidence presented in this paper suggests that rupee depreciation cannot be attributed to a single factor. Instead, it emerges from the interaction of crude oil dependence, geopolitical uncertainty, dollar strength, monetary policy transmission, and inflation dynamics. While oil shocks remain a persistent source of pressure, successive geopolitical crises appear to generate cumulative and potentially lasting effects on the exchange rate. So, understanding these interactions is my first point of recommendation. And the second point of recommendation that I have is that India moves further away from getting the sourcing their crude oil from geopolitically risky countries. I'm open to questions.
Okay, so participant, in many time you had narrated that the price depreciation is directly indirectly linked with the crude oil availability and the India's dependency on the other countries. So with this, you see in a ministry like in India, the central government has initiated number of process to reduce the dependency on the import of the crude oil, like specifically on the countries. But we see E85 and the E100, even like news are going viral regarding this. So what is your in your assessment, like whether coming up with the ethanol based biofuel like will increase the depreciating nature of India's currency value, or like it will keep it as a stabilized currency coin if we stop importing the crude oil? What is your take on it?
So your question is like, I'm trying to understand. Your question is basically, instead, what would be the effects on the rupee rate if we domestically produce oil? Correct? Uh, Hello.
Yes, I meant to say if we stop the import of crude oil, whether our rupee rate will be reduced. That's my
So
specific.
at this point in time, um, India has a structural dependence on importing crude oil. So that means that regardless, because of the fact that we are not able to produce this amount of oil that we consume, we will export it. Now, my recommendation was that to shift the source of export to different countries that are not as politically risky, geopolitically risky, which do not have conflicts that arise soon. So it's not that we can't stop the imports for crude oil. We can definitely reduce it, but reduction for this will take time, considering that we have to develop first the technology, as well as we have to develop the source extraction areas for us to extract the oil, and then accordingly see how much of this oil can we actually depend upon, and the processing and all of that. So that will take a lot more time than can be done for a short term period. So in this sort of a situation, we are not able to immediately shift our dependence from an external foreign source to an internal source. So for this, as I have said before, my recommendation is that we shift our sourcing to different countries, because we're not able to support it domestically at the
Okay.
moment.
Okay, coming to your answer and like the things which is happening around in India, you should focus on two aspects in your paper. Specifically, we see that the government has announced ethanol based biofuel, and the government is declaring itself a alternative, or like a mechanism which would be reducing the uh, dependency on the other countries. And
Correct.
also the government's take on it was to the target year of ethanol implementation was before 30, like 2035. But when we see the ethanol implementation has started like immediately, like from 2023-24 onwards, and now the government has decided a target year of 2030. So this
Okay.
shift, Who will pay the price of this shift? As you well mentioned, that every developing development in this segment where there is a fiscal policy and the monetary policies involved, it takes time. We cannot suddenly shift it to a like petroleum from a crude oil or based to the biofuel. We cannot do it. But we see in India, the government is in rush, like it is implementing every month a new policy. Like in just 6 months, that there was a E25 or E30. Now it has been E85, and even E100 are going on. Talks are going on in E100. So the government is going very fast with the policies in the India. But when we see in the ground level, our vehicles are not competent enough to have that biofuel competency. Our road structures are not efficient enough to come up. So we need a proper assessment in as per your study, how these things is going as per the policy which was been recommended and the standards which has been followed by the country. So
Okay.
this is what I'd be recommending you for this.
Okay. So more of a policy versus action.
Yes. So
Okay.
you should come up with this in your paper for the revised manuscript submission.
Okay.
Thank you for your
Thank
presentation.
you so much. Thank you.
Okay, yes, the next participant, Vaishnavi.
Yes, just yeah, I'm just sharing. Just a second. Is it visible? Hello,
Yes, it's
am I
visible. You
audible?
can start with, yeah,
Oh,
and you can start with your presentation.
oh, thank you. Every month, India processes more than 22 billion UPI transactions, making it the world's largest real-time digital payment ecosystem. Yet, alongside this remarkable success, thousands of users are simultaneously losing money to increasingly sophisticated digital fraud. Good morning, respected panel. I'm Renvi Singh, and my research examines a fundamental policy question. Can a financial system truly be called financially inclusive if the very people it empowers are ultimately becoming vulnerable to financial crime? India's UPI has fundamentally transformed the architecture of digital finance. Today, India processes over 22.64 billion monthly UPI transactions worth nearly 29.5 trillion rupees, while more than 550 million plus Jan accounts have expanded participation in formal banking. As a result, India now processes more real-time digital payments than many major economies combined. In short, UPI represents one of the most successful examples of digital public infrastructure anywhere in the world. However, this remarkable success introduces a serious contradiction. The same infrastructure that has dramatically expanded financial inclusion has simultaneously expanded consumer exposure to fraud. As millions of first time digital users enter formal finance, digital payment fraud has increased significantly, with vulnerable users often disproportionately targeted. This creates the central paradox behind my research. Has financial inclusion unintentionally created financial vulnerability? Firstly, let's identify the four major fraud typologies operating within India's UPI ecosystem. First is the phishing fraud, where criminals impersonate trusted institutions to steal credentials such as OTPs and PINs. Second, QR code fraud, where users unknowingly authorize payment outflows under false assumptions. Third, remote access fraud, where malicious applications allows fraudsters to directly control victim devices. And finally, mule account network, where stolen funds are rapidly transferred across multiple accounts to hide financial strain. The key observation here is simple. Fraudsters are not primarily exploiting technology. They are exploiting the consumer behavior. At first glance, it may appear that fraud itself is the primary issue. However, my research argues something fundamentally different. The problem is not fraud, the problem is a deeper structural problem, that is the regulatory lag. India's payment innovation has evolved significantly faster than the institutions responsible for consumer protection and fraud governance. Real-time settlement allows almost no time for fraud detection. Mass adoption has expanded faster than digital literacy, and once fraudulent transactions are completed, Reversal becomes extremely difficult. In simple terms, governance has failed to evolve at the same speed as innovation. This brings me to the central argument of my paper. Government currently measures financial inclusion using traditional indicators such as account ownership, transactional value, and payment adoption rate. But these metrics are incomplete. They ignore critical variables such as fraud preparedness, consumer protection, security readiness, and digital literacy. My research therefore argues that access alone should no longer define inclusion because access is not the same as secure participation. And if participation itself remains unsafe, inclusion itself remains incomplete. Thus, if the problem is structural, then the solution must also be structural. Thus, I propose five policy reforms. First, financial inclusion metrics must be redesigned to include fraud, vulnerability, and consumer risk indicators. Second, institutions should deploy stronger AI-based predictive fraud detection system capable of identifying suspicious behavior patterns before the fraud occurs. Third, India urgently requires a mandatory national digital financial literacy framework. Fourth, fragmented fraud reporting system should be replaced by a unified real-time fraud response architecture. And finally, payment governance must shift from reactive dispute resolution towards preventive fraud monitoring system. The future of digital finance requires a fundamental policy transformation. Government can no longer measure success purely through transaction growth and access expansion. Future digital finance system must shift from reactive fraud response towards predictive fraud prevention, from measuring access alone to measuring secure participation, and from short-term adoption goals towards sustainable financial inclusion. The next phase of India's digital economy will not be defined by how people enter the system. It will be defined by how safely they participate within it. Lastly, India's UPI ecosystem has no doubtly successfully transformed the financial access and positioned India as a global leader in digital public infrastructure. But when individuals enter financial system without institutional protection against exploitation, financial inclusion becomes structurally vulnerable rather than genuinely empowering. My research therefore argues that in digital economies, access without security should no longer be treated as inclusion. It should be recognized as incomplete inclusion because true financial inclusion begins only when the participation itself is more secure. Thank you. I'm open to questions now.
Okay, participant. Currently in India, there are few challenges which we face in the financial risk management system, specifically in financial fraud. You might heard this like just 2 weeks ago, RBI and also the institutes which is managing the financial frauds in India, they have issued one of the guidelines, and those one of the guideline tells I cannot tell you the name of the guideline right now. I don't recall the name. In one of those guidelines, it was mentioned that the fraud system of frauds has to be traced in 7 layer. What does it mean by 7 layer? For example, a person who had defrauded someone and got into his bank account with a short amount of 5,000 rupees, and that particular 5,000 rupees, which is a disputed amount, a person whose amount has been snatched to that, the person complains it to the National Payment
I'm so
Corporation.
sorry to interrupt you, sir. I'm so sorry to interrupt you, sir. Sir, can you just repeat the last sentence? I couldn't hear you. I'm so
Yeah.
sorry. You said the 5,001.
So
Can you
let's
please repeat it from
I'm
there?
just making the example simple. Let's say a
Okay.
5,000 disputed amount, which is a amount of some person, and the person complains to the cybersecurity that he was been frauded with this 5,000 rupee amount. But when this amount went into the person who has been alleged of this cyber fraud, the person immediately transferred this to the other account, and as per the rule, that complete account would be on freeze. The complete 5,000 rupees would be on hold or lien. So that was the initial rule. But nowadays, what is the current system or the current rule? That the subsequent amount, when it moves from one bank account to other bank account, it will happen up to 7 layer. Like the lien or the hold will happen up to 7 layer. Like you are transferring me the amount, I am transferring it to some other person. The other person is transferring it to other person till 7 layer. The account will be lien. But here the problem arises. What is the problem? The layer 7 or layer 3, 4, 5, the person doesn't know from where the amount is coming. and when they receive the amount, their whole bank account gets freezes because the amount which they are receiving is disputed. So this is the problem. Now I had initiated conversation with number of trade unions, also like a number of corporate bodies, number of industry associates. So all of them are having the same concern. Like let's say a merchant who has opened a shop in a well-known city center. He is taking payment with a QR. He doesn't know or he doesn't verify the payment the people are doing it. So for a payment of 10 rupees, the person randomly scans and pays to him, and he is receiving a 10 rupees in his bank account. He doesn't know from which layer the amount might have come to his account. The whole account gets freezes. So this is a matter of concern which like assessed as per the financial security topic. So this is what I'd be suggesting you for your paper to look into, like to all these aspects of today's lesson.
Absolutely, sir. You are absolutely right. People are not aware that they are being used, that their account is being used as mule account. This is what we call as mule account, right? So they do not know that they are being used as mule account because they are not aware that their account is being used for purpose of financial transactional layering. Like you gave the example, the money is being transferred through seven accounts, and they're not aware of that. That one they themselves are one of these accounts for participating in this bigger financial crime. That is why I said that right now, even if they complain, even if they do something, it is very reactive. It will only RBI or any other firm will only take or help them after the fraud has taken place. Thus, I am suggesting a proactive fraud detection system. Firstly, and
See,
secondly, like you also said,
proactive, see, participant, proactive fraud detection mechanism is not the first time the India or even it has been recommended for many years. Like it is not the first time you are coming up with this type of recommendation. Specifically for a
definitely,
country
sir,
like
it's not.
India, specifically for a country like India, even for the South Asian nations, we cannot like make this system 100% proof. There has to be some security lapses. There are criminals who are waiting for the security breaches. So, like, you cannot make it 100% tight or 100% proof. There has to be leakage. Now, how we can avoid the leakage by coming up with a system? The RBI and the other financial associated bodies they had came up with a seven layering system because what was the previous system that once a account gets the amount fraudulent amount, if the complaint comes, only the fraudulent account gets lien or hold the like subsequent lien there is no system of subsequent lien that amount when it gets transferred to the secondary person there is no lien on it and the cyber criminals take loophole into their advantage. They immediately used to transfer the amounts to the subsequent account, and for this reason nowadays the government has come up with a second layer policy. But again, second layer policy has a flaw. As I mentioned, the person who is situated in fifth layer and sixth layer, they doesn't know from how their account is getting freeze. They had not participated in it, but indirectly they had participated it in the transaction. So this is what I want your specific paper to look into how this problem can be challenged, like how this problem can be solved specifically upon this theme.
Okay, sir. I'll definitely look into it. And just adding on to something you said, that you are absolutely right. That as of now, there will be leakage no matter what we do, and there are existing predictive fraud detection system. However, right now, these existing fraud detection systems they are very scattered. They are not uniform across all the places. UPI has reached remote areas as well, but these systems they have not reached yet there, and that is what the whole paper was focusing on right now. I will also look into what you said. That is definitely something that I will look into it for the future paper.
All right. Thank you for your presentation.
Thank you, sir.
Now we can move ahead with the next participant. Yes, Shivam Soni.
Yes, sir. I'm presenting.
So all the participants who is present here, kindly keep your presentation PPT loaded. We had already exceeded our allotted time frame.
So, is my screen visible, sir?
Yes, you can start with your
Yes.
presentation.
So, I'm Shivam, and my research paper is on can digital trade facilitation unlock South Asia's missing regional value chain? So, if we see, uh, over the last 2 years, South Asia's overall trade facilitation implementation rate rose from 60% to 65%. That is according to Escape's Global Survey 2025. The OECD finds that border bottlenecks across the South Asia Pacific fell by 4.4% between 22 to 24. By if we see, they are also the reason is digitalizing their trade procedures. And if we see, South Asia's intra regional trade share sits at roughly 5% of its total trade. And when we compare it to Asian, that is more than 25%, and European, that is around more than 60%, it is very less. Because if we see, regional value chains and cross-border production networks that drive industrial upgrading have simply not formed at anything like the pace the digital investment would lead to expect. And I call this as implementation gap. So moving ahead, we can see the data. If we see, the domestic paperless trade in India is about 100%, while the cross-border paperless trade is 66.67%. And if we see, the gap is 33.3 percent. And similarly for other countries as well in the South Asian region, the pattern holds for every single country in the sample without exception. If we see, the OECD confirms it from a governance angle too, like cross-border agency cooperations, the dimension closest to regional integration improved in only like 38% of Asia Pacific economies in 22 to 2024, which is from the lowest baseline of any indicator measured. And from the WTO single window data reinforce, we can see like the lowest submission rate of any trade facilitation agreement obligations, and the heaviest reliance on category C loading, that is uh, hardest and take times to implement actually. And if we see, this is the domestic gap between domestic gap and cross border performance. And further, I have proposed to SARVEF SARVEF, that is South Asia Regional Value Chain Enablement Framework for this. So it has 5 pillars, which are, the pillar one is digital trade facilitation, means the custom automation, paperless trade, and others. The pillar two is institutional interoperability. So the cross-border documentation recognition that is digitally done in pillar one can be homogeneous for all countries. Then pillar three is connectivity and logistic within the country and cross-border. Then pillar four in it is industrial capability. That means building the manufacturing competitiveness, supplier networks, MSMEs, and others. And UNIDO's research is also shows like productive capacity is a precondition for value chain entry. Its products are not actually. And the major portion is pillar five, that is governance and trust architecture, because government is someone that
Participant,
actually,
you can move to the recommendations and solution segment.
so it is the framework that is suggested. And if we see, this is the failure, like if even one pillar is there but others are not there, then the work is not done. That can be seen in BBI and motor vehicle agreement that is signed in 2015. And here is the SRVF readiness assessment that can be taken to understand the readiness of any country for the regional value chain. It checks on the 5 pillar. And this is the implementation plan, that is phase one, divided into 5 phases with the stakeholders that will be involved in the particular region. And this is the research contribution, like the South Asian integration paradox, that has been the first one, and the SARVEF framework, the South Asian regional value chain readiness index that is in the previous slide. Thank you. I'm open to question.
Okay, participant, what are the countries reference you have taken into for your study?
So currently I've taken India, Pakistan, Bangladesh, Sri Lanka, Nepal. And if we
And,
see,
and what are
yes,
the findings specific to those countries, out of which country is doing well in your
so
report?
if we see accordingly the framework that I proposed, none of the countries is very better, but India is exceeding because India has already in domestic digitalization, it has done a lot. And if we see to the other reports of WTO, it actually gains 100% points in that, and that can be seen here. Also, if we see, Pakistan is second when it comes to domestic paperless trade, but if we see the cross-border paperless trade, it is very less. The reason is not only the preparation, but also the conflicts between the government and the due to the border issues of India, Pakistan, and the issues in the political instability in Nepal and Bangladesh.
Okay. Okay, participant, specifically, there are one suggestions for your study.
Yes,
India
sir.
has last year come up with a Niti Aayog's report related to artificial intelligence before the summit, AI Impact Summit. So you have to come up with those like reports, specifically the reports on artificial intelligence, in order to know what are the requisites the government is looking into with artificial intelligence, and in which field the government is trying to look into. So kindly refer those report for your reference studies in the revised manuscript. Also, like check consider the OECD reports of 2024 to 2026. That it will also give you a glance that how the countries are working on the artificial intelligence, specifically on
Sure,
the
sure.
segment of the MSMEs and other. So these are the two suggestions. I'll try to incorporate it in your reference uh, in your revised manuscript. All right. Thank you for your presentation.
Thank you, sir.
Okay. Yes, now we can move ahead with the next participant. Deepashri Patil. Okay, Minakshi. Yes. Minakshi, you are the next participant.
Sir, am I audible?
Yes, you are audible. Kindly share your presentation.
Sir, is my presentation visible, sir?
Yes, you can start with your presentation.
Respected chair and distinguished participants. I would like to, so my topic is a South Asian perspective on due diligence in arms procurement and the trade governance framework for arms importing states. So traditionally, international arms trade regulations, they primarily focus on the responsibilities of exporting state. But however, this approach overlooked the significant role played by the importing states as well. So my paper argues that the due diligence obligations are not only confined to the exporting states, but also they have an equal. It is also confined to the importing states as well. When it comes to the legal responsibilities under the international humanitarian law as well as the international human rights law and arms trade treaty. And the study seeks to answer four major questions. And through these questions, the paper shifts the focus from an export-centered framework towards a shared responsibility model. Now, coming to the third slide, the legal basis of due diligence obligation, it actually originated from both IHL as well as IHRL. So first, focusing on IHL, we have two main conventions, that is two main legal frameworks, that is Geneva Convention as well as the Additional Protocol 1. So in which both imposes a positive obligations on the state. So if we look at from the view of an importing state obligation, so the the importing states have an obligation to prevent violations of IHL. And even if we look into the contemporary armed conflicts that is going around around the world, whether it is Israel-Hamas conflict, Russian-Ukraine conflict, or Syrian conflict, clearly demonstrate the humanitarian consequences of the conflict, where weapon continues to flow into the conflict zone. So this highlights the needs for rigorous scrutiny of arms import. Now, coming to the IHRL, I would like to highlight few legal frameworks where it provides the implied obligation for the importing states. First one is ICCPR, where Article 2, Clause 1, 6, and 7 requires the importing states to assess whether the imported arms could contribute to the violation of right to life or facilitate torture, etc. And if we look into the CRC, that is Convention on Rights of the Child, where the arms importing states should evaluate the potential impact of the imported weapons on the children and prevent their use in violation. And coming to the CEDAW, it actually provides a general obligation towards all states, where the state should assess whether the imported arms are likely to facilitate sexual violence or any sort of gender-based violence during the armed conflict. Now, coming to Convention Against Torture, which also provides a general obligation, that the importing states must ensure that the imported weapons are not likely to be used by the recipient to torture or for any other ill treatment. So if we look into the IHL as well as the IHRL, the primary difference is that the IHL, it mainly looks into the foreseeable risk standards. And when it comes to the IHL, it requires a clear risk of serious violation. So because if we look into the case of Myanmar, the weapons have been reportedly used the imported weapons are being used for extrajudicial killing, torture, arbitrary detention, repression, etc. So this clearly demonstrates the inadequate due diligence which happened from the side of the importing states. Now, coming to the major part, that is the Arms Trade Treaty. The ATT is often viewed as a treaty which is directed primarily at exporters. But however, the treaty also creates an important obligation towards the importing state as well. But it is only shown in an implied way. So I would like to highlight few articles. The first one is Article 8. Article 8 mentions about the importing state parties' obligation to regulate their import, which is happening under their jurisdiction through national mechanisms and various other regulations. It also ensures they have an obligation to ensure end use as well as end user documentation as well, and cooperation in risk assessment, transparency obligation when it comes to providing all the information to the exporting states before the export happens. So one among such example that happened is in the case of Bosnia and United Kingdom's AK-47 case. In this case, the weapons were actually imported into UK, and it were later diverted to Iraq. So this demonstrates the weakness in end user verification and monitoring system. Similarly, in UAE and Sudan diversion case, the arms exported to UAE were reportedly diverted to RSF in Sudan. So this clearly highlights the failure.
Participant move to the
Yes, sir.
recommendations and solutions.
Yes, sir. Yes, sir. Sir, putting India as a case study, I would like to highlight few things which is highly connected with the recommendations. India is one among the major arms importer in the South Asian region, because as per the CIPRI data, around 8.3% of the global arms imports are accounts to India. So what happens is that what I analyze is that India's current procurement pattern has diversified so largely that it is multi-partner strategy now. But it is equally beneficial for the military readiness, but at the same time, it complicates the oversight and due diligence across different legal systems and suppliers. So India also tried to undertake some legal framework relating to the procurement, that is DAP 2020 as well as DPP 2016. But the major drawback of this legal framework is that it only focuses on the cost efficiency and indigenous manufacturing and operational efficiency. It does not address the main concerning factors relating to the humanitarian compliance or the human right compliance or the diversion risk. So before coming to the highlighting the diversion risk, I would like to explain what exactly is diversion. Diversion is like providing the imported arms to a different end user. It could be a non-state actors like terrorists as well. So, and various other actors. And some of the evidences that highlights this implementation gap is in the case of Myanmar, the Tatmada received weapons from multiple external sources. So, according to various sources, it was mentioned that India was also one among the contributors uh, for the weapon importers done in the case of Myanmar. And in the case of Bihar AK-47 arms smuggling investigation, which was done by NIA, it also highlighted the illegal diversions that happened. So all these examples collectively demonstrate the accountability gap that our country faces. And so, and the several structural factors which explains why importer obligations are often poorly implemented. The first important factor is the insufficiency in transparency. So this could be mainly due to the secrecy, which is making the public oversight difficult. And the next one is end user control, which remains weak. It could be due to the lack of end user certification, post delivery inspection, and continuous monitoring, which often the states fails to do.
Participant, you had exceeded time. Kindly conclude.
Oh, okay, sir. Okay. Sir. Coming to the concluding part, the paper proposes 6 important recommendations, and the first one is institutionalizing human right and IHL risk assessment within the procurement decisions of the in the domestic legislation, and the second one is to strengthen the end user control through post delivery verification, stockpile management, record keeping, traceability system, etc. And the third one is that if we attain the second objective, we could automatically attain the third objective as well. That is to increase transparency and oversight through parliamentary review and publication of non-sensitive procurements. And the fourth one is to promote regional cooperation through information sharing. And the fifth one is to align domestic procurement policies with ATT principles. So, in order to, so it is necessary that the South Asian countries should ratify, sign, as well as ratify the Arms Trade Treaty. And the last one is to incorporate soft law instruments like your UNGT and human rights into the procurement governance. By this, I would like to conclude my presentation, sir.
Okay, I have no question for you. There are few suggestions. Your specific paper has to deal with the policy reforms, like in response to the procurement oversight in South Asian states. How my
Yes, sir.
purpose is like you should focus on those states where there is a pre-existing legislations, but those legislations is not acting in a appropriate way. There is a legislative failure. So looked
Yes,
into
sir.
the legislative failures. There are in South Asian country the major concern in the policy for the procurement of the arms are like their failure on restricting the arms towards the nations or nationals, like
Yes, sir.
they are coming with the policy of nationals restrictions, like no individual can come up with the procurement of the arms. So these things has to be assessed in a proper way, how South Asian countries can go for this and how their policies has to be changed in a way to come up with a better policy framework for this subject matter. So looked into it
Yes,
in your revised manuscript. Take all the
yes,
South
sir.
Asian countries and make a assessment studies in relation to your subject.
Yes, sir. Thank you, sir.
All. Thank you for your presentation. Yes.
Thank you.
We can move ahead with the next participant. Participants, both of you are not audible. Yeah. Yes.
Good evening, sir.
Let
Are we audible now?
Yes, you are audible and visible. You can start. Yes.
Right. So, good evening, panelists and the LinkedIn Live professionals. I am Sanvi Jain, and co-authoring with me is Deepshri Patil. Today, we will be discussing the tariff imposition and the state of chaos in South Asian countries. Right. So, global trade today, like the fragmentation happening in the global trade, isn't because of the economics, but more of geopolitics involved, be it tariff wars,
friendshoring, export controls, all of them risking the developing countries. Now, mainly the South Asian countries here are not competitors, they're pretty much complementary. And the framework we have proposed is SATAF, which stands for South Asian Trade Adaptability Framework. Now, what does it actually mean and what are the pillars? So, SATAF basically has three pillars. The first is the Joint Negotiation Cell, wherein each country will not be negotiating alone with the European Union or the US or the ASEAN blocs. They would come together as a combined force with a comparative narrative that they will be proposing as a joint unit. The second pillar in this framework is what we call a tiered value chain compact. Now, rather than competing with the same low end manufacturing contacts, they will come together and each country will choose their own strength. The third pillar we have is the collective industrial growth. Now, what does this mean? Collective industrial growth refers to the mutual recognition of quality certifications. So, an MSME exporter doesn't have to get certified three separate times. All right, moving on to the next slide. We have the institutional design and the path forward. Now, a framework would only work if it's realistic. Is SETAF realistic? Let me answer that. Now, here, governance happens at three levels. At top, we have ministerial steering group that deals with the review priorities, resolves disputes. Below that, we have technical secretariat that rotates with three capitals, handles daily work, customs, standards, harmonization, an industry and MSME forum that stays demand driven. Sequencing matters here a lot at SITAF. SITAF doesn't try to do everything at once. It starts with easy wins, a shared customs data portal. Now, the main concern for SITAF is that we are trying to make a shared vulnerability of South Asian nations to a shared leverage. Deepshri now here will take up the quantitative part. Thank you.
Okay, thank you, Sanvi. Now, moving on, I would first like to reiterate that the Trump tariffs highlight an important vulnerability in India's trade structure. So, when exports are concentrated in a limited number of products or markets, any tariff increase or external shock can significantly reduce export revenues and slow down the economic growth. Now, to address this challenge, SITAF recommends a strategy of export diversification. However, this is not simply diversification for its own sake. Instead, India should diversify into higher PRODI products. Now, PRODI is an index developed by Hosman Huang and Roderick in 2005. It measures the sophistication of a product based on the income levels of the countries that export it successfully. So, products with higher PRODI values are typically associated with more advanced and productive economies. Now, the empirical evidence shows that countries with higher average PRODI levels in their export baskets tend to experience faster subsequent economic growth. At the same time, diversification improves resilience. A broader export portfolio reduces dependence on any single sector or market, making India less vulnerable to future trade disputes, tariffs, or even external shocks. Now, unlike India, Bangladesh faces a different challenge. So it exports mainly, its exports remain highly concentrated in the ready-made garment sector, limiting its ability to diversify and increasing its exposure to external shocks. So now research suggests that this concentration is partly driven by the incentive structure created by existing domestic and international trade policies. As a result, tariff rationalization is a key policy recommendation. Now, reducing tariffs can lower the cost of imported intermediate inputs, improving competitiveness, and encourage firms to expand into new export sectors. Beyond tariff reform, Bangladesh should focus on attracting foreign direct investment, improving the investment climate, and addressing infrastructure and logistics bottlenecks. Now, these measures would support the development of non RMG industries and promote broader export diversification, like I mentioned earlier. Now, furthermore, deeper trade agreements with India and European Union could significantly expand market access. Studies show that these agreements are expected to encourage diversification into higher value manufacturing and service sectors, strengthening Bangladesh's long-term economic resilience. Now, to conclude, To conclude, trade fragmentation presents a common challenge for South Asian economies, but it can also create an opportunity for greater regional cooperation. Now, while India should focus on diversifying into higher priority, more sophisticated exports, Bangladesh, on the other hand, should focus on tariff reforms and deeper trade integration to expand beyond traditional export sectors. So, with that being said, together these country specific strategies align with SETAF's broader vision of coordinated action. So, thank you very much. The forum is now open for any questions.
Okay, participant, how do you distinguishes the effect of 2025 tariff from the other factors influencing manufacturing growth, such as post-pandemic supply chain, restructuring foreign direct investments, and domestic industrial policies?
Right. So thank you for the question. Firstly, I'd like to state that the tariff imposition recently by Donald Trump. So this imposition was different from the other factors due to its intensity after a pandemic. And since the nations were already recovering from the loss or the deficit that the entire GDP or the economy suffered during that particular tenure, these tariffs were a blow to their entire economy in a market where everything is on a downward graph. Right. So we have suggested a framework wherein South Asian countries can collectively combat the tariff imposition. They do not need to beg to get out of a scenario wherein financials are involved. They can come together, impose their strengths, and work upon it together. That is what this framework suggests. I hope that answers the question, panelist.
Okay. Okay, I will also like to you to look into the WTO framework of dispute resolution mechanism, which has been specifically paralyzed for over few years. So how this dispute settlement mechanism can revamped again? This is what I'd be asking you guys to look into in your paper. Uh, because when we see the purpose of WTO was to stabilize with a mechanism where all country comes and sit together and come to the common consensus. But for recent years, even post pandemic, we see the whole mechanism is getting freezed. There are no single thought on in one sitting. There are multiple negotiations going on, but no proper action is coming forth. So this is the major area of concern, which I think your paper should majorly focus how this kind of mechanism or this consensus should look, along with the fact which you guys has pointed out regarding the South Asian regional cooperation, that is definitely is necessary. But how we can come up with all this international mechanism pre-existed along with your South Asian thing. This is what I'd be suggesting you guys to look into in your paper, in your revised manuscript submission.
Panelist, if I may add, the
Yes.
framework with dispute resolution in concern with WTO, the reason wherein it has become a bit dormant is because the nations are not approaching WTO for a dispute resolution. And the reason being that WTO has been dominated by the powerful blocs of the world. So the global south has been suffering to a level wherein even if they go for a settlement, there are chances that majority of it will not be in their particular favor. And we'll definitely include this narrative in our paper along with the other narratives that you suggested. So I hope that it addresses the concern.
Okay. Yeah. Thank you for your presentation.
Thank you.
Thank you so much, sir.
Yes. Now, Mamta Patel, you can present your paper. Yes. Participant, you are not audible and your slides are not visible.
Are my slides visible, sir?
Yes, you can continue with your presentation.
Good evening. My name is Mamta, and my topic of presentation for today is impact of print and social media marketing on specifically Gen Z's banking behavior in Tier 2 cities of Maharashtra, India. So, my topic is divided into three parts. First is fintech growth. As we all know, today the banking is more about the digital banking, online banking, rather than the traditional banking when we are concerned regarding the Gen Zs. The Gen Zs are more connected to the social media and they believe what the social media tells them. So, all these things, if we connect the fintech growth at this moment, the social media influence on the Gen Z, and thus their banking behavior as a whole, then we can find out how we can enhance the involvement of Gen Z in banking in a more proficient way. So my research objectives included the how Gen Z actually get influenced by all these things like the marketing campaigns by the financial institutions, the government, etc. My research methodology included uh, uh, I
Participant,
made
you
a
can
Google
skip
form
research
with.
methodology.
Okay. So, among the respondents, I majorly had the candidates, the respondents between 22 to 24 years of age, which is middle-aged generation among the Gen Zs. Then, from the Maharashtra, the Tier 2 cities that I selected were many different cities, but mostly respondents were from Nagpur, Amravati, and Akola. The among the respondents, most of the Gen Zs use UPI apps and digital wallets for their financial uh, purposes, and they mostly use the UPI apps and digital banking apps nearly 2 to 3 times in a day. The preferred platforms from where the Gen Zs get their information, like what products to choose, what bank or what financial institution to choose while for their financial purposes. They mostly trust YouTube and Instagram on majority basis. Then even if the Gen Zs check the YouTube and Instagram for the decision making for this financial decisions, but still they do not highly trust the social media. They first fact check all those information and then they decide. But still, uh, in my findings, I found out that even if the Gen Z, we say that they are very influenced by social media, they get influenced to a great extent from the social media like YouTube, Instagram, and several times LinkedIn as well. So if the financial institutions or even the government use the social media for creating awareness about the banking system or the schemes by the government, it will create a great impact on the nation as a whole. So my conclusion is we have to bring the collective effort of incorporating this banking behavior in the Gen Z by using the social media for enhancing the fintech in our country. Thank you. I'm open to questions from the panel.
Okay, how do you determine whether fintech adoption and social media marketing actually cause changes in the Gen Z banking behavior rather than the simple attracting individuals who are already digitally inclined?
Yes, actually, there before the Generation Z, let's say millennial, they were more relying on the traditional banking where they used to go to the physical banks if they want to get a solid information. They never trusted fully on the social media or any information they get online. But when I got responses from the Gen Z people, they trust the social media more compared to the previous generations.
Okay, So, there are two suggestions for your paper specifically related to the policy. Your paper deals with a very good empirical study, but it has to be backed by some of the policies related to it. You can refer to some of the policies with the fintech. You can refer to the RBI report and also the report of NPCI, National Payment Corporation of India, regarding the uses of fintech by the Gen Zs, and definitely those report can come up and give you some policy recommendations as per your understanding. So try to include those reports in your paper,
Yes.
specifically with your reference to the recommendations and the policy suggestions.
Yes, sir, sure.
All right, thank you for your
Thank you.
presentation. Yes. Host, with this we are coming to the end of this session. You can move ahead to the conclusion.
In between while he was presenting.
Okay, yes,
Can
host.
Yashwant Raj is actually has not presented, sir, yet. So can we let him present?
Yashwant Raj, have you not presented?
No, sir, not yet presented, sir.
Okay, just let me check whether you had been presented or not. But you had been marked for your presentation. Okay, yes, you can present it.
Okay, sir.
Let us
Thank you,
go.
sir.
Okay.
Sir, is it visible, sir?
Yes, it's visible. You can start with your presentation. Just stick to your research questions, then your recommendations and suggestions, and then
Okay, sir.
conclusion. It already exceeded a 1 hour. Yes.
Okay, sir. Sir, is it visible?
Yes, it's visible. It's completely visible. You can start.
Good afternoon, sir. MSME accounts for more than 90% of all firms across South Asia. They employ the majority of the working population, yet they are systematically excluded from cross-border digital trade, sir. This is the problem statement, and our central research question is: can generative AI equalize opportunities for MSME across South Asia, and what policy mix manages its risks, sir? Generative AI addresses each trade barrier through four concrete mechanisms. First, multilingual translations. Second, AI-powered digital marketing. Third, intelligent customer support. Regulatory and compliance assistant is the last addresser by the generative AI, sir. Opportunities were language barrier elimination, low-cost digital marketing, 24 by 7 customer engagement, and reduced compliance cost. But our paper faces such challenges like algorithmic bias, data privacy risk, platform dependency, infrastructure gaps. Our recommendation steps, sir. There are 5 steps in our recommendation. One, establish a regional AI working group focused on MSME trade. Second one, fund open multilingual foundation models and local fine-tuning hubs. Third one, create MSME-friendly compliance toolkits and shared service platforms. Fourth, design propor- proportionate regulation, pilot sandboxes, and impact assessment. Fifth one is coordinate a South Asia position in WTO dialogues advocating MSME safeguards. Conclusion: generative AI has real demonstrated potential to reduce trade friction for South Asian MSME across languages, marketing, customer service, and compliance. These tools exist today, sir. Thank you.
Okay, participant, how can a generative AI help South Asian MSMEs to overcome traditional barriers to international trade and integrate into global value chain?
Sir, it supports multilingual language, sir. We can trade by AI using AI, sir.
Is it only the language which is a traditional barrier?
No, sir, there
Because
is a cross-border barrier.
like
We can
let me
use
complete
AI for
first.
the.
Participant, let me complete first. Because we see before the introduction of AI, before 2020, there was pre-existing like a translator app of by Google. Many people used to use it. And why exclusively generative AI is required? We can use the app also. Like it was priorly existing. Yes, participant. Okay, you can take two suggestions for your paper, explicitly working for the policy recommendations. Yeah, there are two suggestions your paper should work into. Suggestion number one is Niti Aayog's report. You should look into the Niti Aayog's report, which was published on 2025 regarding the uses of artificial intelligence AI in India. And there are also number of technical sessions reports on the India AI Impact Summit, which has been taken into consideration. They try to look into those reports and see how a generative AI is supposed to help into the South Asian MSMEs and how they can overcome the trade barriers. So the study currently lacks in lot of measures. You have to look into those aspects of those report. Then only you can come up with a better and policy recommendations and the suggestive frameworks and tools.
Okay, sir.
All right. Thank you for your
Thank you.
presentation.
Thank you, sir.
Okay. Yes, we can now move ahead to the conclusion.
Yes, sir. So, should I end the conference now?
Okay, yeah. So thank you, participants, and all the managing teams for their correspondence to this program. But we'll be looking forward to number of revised manuscripts as we come to the end. And but we also congratulate our partners to this program in collaboration under OECD and the United Nations organization. Also, we congratulate our team under the South Asian Academic Summit. But let's together come to this conclusive study, and definitely when we publishes our report and correspondence to this conference, it will not only help the students, academicians, but also help the industry professionals in order to know how the aspect of South Asian economic trades and development comes into, and how long we have been developed, and yet there are many things where a development can go. Thank you to all of you and for your cooperation in this event. Thank you.
Thank you so much, sir.